All right. Hello, everybody. Welcome back to another episode of the Market Close. It has been quite the day. And the reason I'm smiling right now is because sometimes in the face of pain, all you can do is smile. It's been a rough day. It's been a rough day. The amount of news updates that have happened today in the context of the Trump administration is the heaviest news day I've seen in the past 2 months. I'm pretty sure this news day is going to get, or the news days in the future are only going to get heavier and heavier. But we have a lot of new things to run through. They have to do with a certain T word that you guys probably are familiar with called tariffs. That is affecting the broader equity markets. That is affecting the global equity markets. That's also affecting treasury yields right now as we see them get even lower on the 10-year, which is good, but it might not be for the right reasons. 10-year now at 4.153. That's the lowest it's been in 2025. And then on top of that, obviously, we got to talk about what the hell's going on with this bad boy, Nvidia. I think we'll get started with Nvidia. We got a lot to talk about when it comes to tariffs. We also have some earnings today, so we'll go through all that stuff. But I think let's start off the show. Thank you, everybody, for being here again on the Market Close with what's going on with Nvidia. Nvidia has wiped out, I believe, $300 billion, a little bit under that, of market cap in the past 7 hours. Down 9.84%. Looks like it's about to go down 10%. It is now below the deep seek lows that bottomed out, I think, at 113.50. We are now at 112.74. And it's red. It really is red. I mean, there's not that many words of encouragement I can provide here or something to make people feel better because it's tough. It's red. It's bad. And we're seeing the ramifications of Nvidia going down across the entire market. The S&P 500, pretty nasty day, down 2%. We have not had a 2% day, I think, in 2025. Correct me if I'm wrong, but I don't think we had a full 2% drawdown. I think the most we got to was like 1.3 or 1.5%. So this is a first for 2025 in terms of getting a legitimate drawdown on the S&P 500, down 2%. The S&P now, I believe, down about 6% from all-time highs. SMCI, down 14%. Marathon, down 2%. Oh, that Bitcoin trade that we were talking about this morning, back to prices we had not seen since Friday. If you look at this chart right here, we were at 85 on Friday. We got pumped to 95 when Trump tweeted the crypto reserve thing that he's creating, which is going to have all these different cryptocurrencies. On March 7th, we're going to get the summit for crypto, and we're going to see what the White House officially announces. We are right back to where we were on Friday, 85,000. So that whole $10,000 candle that pumped us up to the moon, yeah, we are back on Earth. Palantir getting hit as well, down 2%. Robinhood, which is a crypto proxy, gave away all of its gains. It's now down 6% on the day, 46.90. And obviously, it has not got to the lows that it got to last week at like 44, but still, it doesn't look that encouraging given what's kind of going on here. So what's happening with Nvidia? What is happening with Nvidia? First of all, I bought the dip. Bought another 50 shares at around 114. So I did indeed buy the dip. I still continue to believe that this is a dip that will eventually be gobbled up by the market because there's two reasons I think it's happening. Two of those reasons I don't think are going to are going to be solidified foundational arguments for the collapse of Nvidia, aka they're not going to be drawn into perpetuity. They're short-term things that hurt the markets, but in particular Nvidia, but long-term, I think Nvidia is still going to be a very good bet. Now, here's the main thing that's happening right now. I think we talked about this in the morning, but this headline came out around 1 o'clock. And so this is what really started making Nvidia get hit a little bit more. You got export controls. You have more and more export controls that are being levied on Nvidia in a much stronger way than before. It says I'm blurry right now. Is my audio good? See, not only the market, but my stream is messed up today. Yeah, it should self-correct in like 2 minutes if you give it a second. As long as the audio is good, then we should be good. Camera's fine. Yeah, okay. We should be back to normal. All right, we should be good. I think that was internet, to be honest, but it should be better. Okay, so Nvidia stock drops as new China chip smuggling report raises investor fears on further export scrutiny. So, yeah, this is your answer, to be honest. For anyone who's wondering why is Nvidia down 10%, this right here is your answer. We'll talk about the Trump tariffs in a second, which is not really helping Nvidia. But the fact that it seems like the United States is going to go further into investigating what's happening in regards to Nvidia and in particular with what's going on with Singapore, yeah, that'll do it for you. That level of uncertainty, which obviously the markets don't want to see when it comes to a company that's worth 3.5 trillion. Now it's worth 2.75 trillion. And you want this company to be able to maintain its multiple, which some people would argue is an aggressive multiple. Nvidia now trading at a forward PE of 26, which is, I mean, you're paying 40 for Apple, Apple's not growing. Nvidia's growing 70%. You're paying 26, right? So it's just it's one of those things where like the numbers don't make sense on the valuation unless you believe these numbers simply will not have a chance to continue in terms of its forward growth. And that's what the market's saying right now. I disagree with the market, which is why I bought the dip, but it's up to individual investors to decide what they agree with or they disagree with when it comes to what's going on right now. So 112.85 are down 9.65% on Nvidia. That is also hurting all the semiconductors. Now, it's ironic because Taiwan Semi made an announcement today with Donald Trump, and that announcement is that they're going to be investing $100 billion into the United States, in particular in Arizona, to create new fabs. So they're already in Arizona. They're expanding that agreement even further. They are going to be investing $165 million over the next 2 months to start building out new fabs, and then $100 billion over the next couple of years. Even TSM down 4.7% because of what's going on with Nvidia. Broadcom down 7%, ASML down 4%, Intel down 5%, SMCI down 13%, AMD well below that 99 range that it was kind of teetering on in regards to being below 100, now at 97.4. Dell below 100, down 7%. Micron down 3%. ARM is down 8%. SMH, the semiconductor ETF, is now one of the worst performing ETFs of the year. And IGV, ironically, the software sector, is still down today 2%, but it's outperforming SMH because people are thinking, all right, well, if the money's not going to hardware, it's going to go to software. But in reality, if the money doesn't go to hardware or software, then there's just going to be more uncertainty in regards to how it's playing out. What's green today? TLT. Why? Because the 10-year continues to come down. And as that 10-year continues to come down, people find safety in TLT. It's ironic. People are not finding safety in any of the Mag 7. If we go to the Mag 7 right here, all of them red. Apple 2%, Microsoft 3%, Meta 3%, Google 2%, Amazon 4%. I don't know what Amazon did to piss off the market, but that one's getting hit even worse. Nvidia down 10%, Tesla down 4% as well. Tesla was making some progress today at 300, now back to 280. People are not going to big tech. And let me know in the chat what you are using to position your portfolio if you are position sizing it in a way that tries to be a bit more conducive with the macro conditions that are changing. But people are leaving. They're not going to big tech. They are going to things like TLT, or we saw money market fund inflows were 60 billion last week. They're probably going to some safety. I wouldn't be surprised if that number is even higher this Thursday when we get those new inflows. So look, it sucks. There's not much to say other than it sucks, but it does suck. I do think a lot of this is fear around the concept of big tech not being able to deliver an ROI when it comes to AI, CapEx spend, et cetera. I think these are fears that we've had for a couple of years now, and now they're becoming more important given some of the macro stuff that's going on. I still believe Google at 17 times earnings, 15 times earnings is cheap. I think Nvidia at 28 times is cheap. And it might be one of those things where even if it's cheap, it's not going to be recognized for it's not going to be recognized given the uncertainties that exist in the market, which is fair. But maybe when those uncertainties clear up, it starts to get recognized. Maybe this dip gets eaten up really quickly, or maybe they take Nvidia to 100. I mean, I would not be surprised if they take this bad boy to 100. Nvidia is well below its 200-day moving average. Nvidia is filled with uncertainty in terms of what numbers can they achieve versus what they can't achieve. Yes, the gross margins are a little bit down. I don't think that's a bear case, but that's another thing that people point to as bad. Why wouldn't they take it down below 100? I mean, it's really one of those things where we got to see kind of how this plays out and what ends up happening. Okay, you guys are saying my camera quality is getting hit. Hopefully the audio is not lagging in and out, is it? Okay, you guys are saying my camera... The audio is fine, but the camera is getting hit. I don't know what's happening with the camera. It's it's the camera tanking with the market, dude. Like literally nothing should be happening to my camera. I'll close some more tabs if that helps, but I barely have any tabs open right here. It's a Temu $2,000 camera that's affecting it right now. Let me close out a couple more things. Dude, it's the tariffs. I'm blaming the tariffs for everything at this point. I'm blaming the tariffs on everything at this point. Audio is good. Yeah, thank goodness the audio is good. Okay, so let me play a quick little clip of some of the stuff that we got going on. Internet should be coming back, should be getting better. But okay, so to get to the next point, we talked about Nvidia tariffs. So what did Trump say? Well, he said tariffs are coming pretty soon, aka tomorrow. Even if you guys can't see the video too well, here is the audio. This is Trump's argument for why we need tariffs and we need them now.
And they bring fairness. For instance, when people kill their dollar, their equivalent of the dollar, whether it's the yuan or the yen in Japan or the yuan in China, when they drop them down, that puts us at a very unfair disadvantage. So all I have to do is say, Howard, we're going to have to raise the tariffs a little bit, because I've called President Xi, I've called the leaders of Japan, to say you can't continue to reduce and break down your currency. You can't do it because it's unfair to us. It's very hard for us to make tractors, Caterpillar, here when Japan, China, and other places are killing their currency, meaning driving it down. So all of these things add up. And the way you solve it very easily is with tariffs, because when they do that, instead of having to make phone calls every day like I used to do with certain leaders, President Xi, a little bit, a lot of phone calls talking about the fact that they're lowering their yuan, they're lowering it down, and that makes it very, very hard for us. So this way, I just say, look, let them do that, and we make up for it with the tariffs. But
so Trump doubled down on the tariffs. He also said this about Mexico and Canada. This is another reason why the markets are getting hit badly now. He seems very confident to impose these 25% tariffs.
So we're going April 2nd, but very importantly, tomorrow tariffs 25% on Canada and 25% on Mexico, and that'll start. So they're going to have a tariff. So what they have to do is build their car plants, frankly, and other things in the United States, in which case they have no tariffs. In other words,
so it's still a little confusing, right? Because Trump right here is saying that if they build their cars and their goods in America, they're not going to be hit with tariffs. But I know the video is going bad right now, guys. I'm sorry. I don't know what the hell's happening with the internet, but at least the audio is not lagging. But if they don't do that, they're still going to get these 25% tariffs. Now, on top of that, Trump also said something else, which has really pissed off everybody else as well. Farmers. He says to the great farmers of the United States, get ready to start making a lot of agricultural product to be sold inside of the United States. Tariffs will go on external product on April 2nd. Have fun. The fact that he said have fun to me is like just insult to injury, bro. It's been so bad. It's been so freaking bad. Again, guys, sorry for the internet. I don't know what the hell has happened to our internet. It was giving us problems on Friday. I'm the only guy in the house. I don't know why it's acting like there's a strain on the internet, but I don't know. There might be something going on in my neighborhood because this was happening last week. Hopefully it's not going to last for too long, but nonetheless, that is why we are seeing the pain that we are seeing right now. Yeah, if you want a high quality stream, pay an extra tariff. That's what's going to have to happen. We got 2 minutes until the market closes. Nvidia right here at 114. Tesla at 284. We got a lot of stuff to talk about. We still have earnings to get through as well. We have Asts earnings today. We have GitLab earnings today. We have a couple other companies that we're going to be looking at. Okta as well, SMR. But in general, the pain from today seems to fundamentally be coming from this notion that tariffs are not slowing down, even though people thought it was slowing down. The 10-year is kind of tanking off some of the ISM data we got this morning as well that we looked at, which was really not good, right? It was just like the economy is definitely contracting. Also, I didn't even start the show off with this. I forgot to mention the Atlanta GDP. Remember that negative estimate they gave on the Atlanta Fed, the negative estimate they gave on GDP on Friday, negative 1.5%. They revised that to negative 2.8%. It's like they've doubled the rate of decline they think the economy is going to experience in Q1. Now, there's some nuance to this. Again, it's not literally just a 3% decline. There's reasons for why this is happening, but this headline didn't help either throughout the day. This came out a couple hours before Trump reinstated his focus on tariffs. And obviously, you know, it created more volatility in the market. So, I mean, if we grow negative 3% in Q1, that's not going to be the best for the broader economy. All right, here we go. 4 p.m. The stock market, thankfully today, is now closed. All right, markets are closed. Markets are closed. I really hope this internet gets better. I am very sorry. I don't know why it's being stupid today. Oh, Weeble looks fine. I'm looking on my phone. It's just me. Like the actual screen I'm sharing looks fine. It's just I look like a potato, which is weird. So okay, at least you guys can see my screen, as even if my camera's being weird. All right, Nvidia ends the day 114.06, down 8.79%. Amazon 205, down 4%. Google down 2%. Meta down 2%. Microsoft down 2%. Apple, wow, Apple only down 1.5%, and then Tesla down 2.8%. Let's look at crypto. Robinhood down 6.4%. Bitfarms down 5%. MicroStrategy ended the day down 1.7% after being up 20% in the pre-markets. Marathon's down about 1%. Riot's down about 5%. CleanSpark was down 3%. And then Coinbase, that was up 15%. That is down now 5% on the day. The semiconductors, we already went through them. All of them down about 2 to 3% on the day. Let's check fear and greed and see what that looks like. And then we'll get into earnings in just a second. Fear and greed, I would imagine, has to be 16 or below, 17 or below. No, we're at 23. Okay. Which actually kind of makes sense given certain parts of the market that we did see a rotation into that was good. But we are not at literal extreme fears that we were at on August 5th or on Friday. Like Friday was worse than this. And although it might not seem like it, there were certain parts of the stock market that were getting hit even worse. But this is the fear and greed we have right now. Still in extreme fear. I guess we'll see if that gets even lower later throughout the day. Fear and greed is also a bit laggy. That's fair. So after about 20 minutes, we'll take a check on that and see if that went down as well. Here's the heat map for today, and then we'll get into earnings. I think the internet should be better now, so video should be better. As you can see, tech took it on the chin. Financials or fintech took it on the chin. And then real estate took it on the chin. But pharmaceuticals, health technology, not doing too bad. Utilities, not doing that bad. Communications, Verizon, T-Mobile, AT&T, not doing that bad. Even industrials, a little bit of a mixed bag, but it's better than what we're seeing right here. So this has really been a tech-based sell-off, and no one's rotating back into tech. And I guess it's either a falling knife or one of the best opportunities to load up on tech. I think eventually we'll find out what the answer is. I think it's more of an opportunity than a falling knife, but we're going to have to see how this ends up playing out. All right, earnings. Let's get into it. ASTS. This is a space company I know a lot of you guys like. I am not in this one. They are not pumping. They are really showing nothing. They're up 0.7%. We also have GitLab. This one is up 0.1% or 0.8%. And then what else do we have? We have GitLab, and then we have SMR and Okta, another software company. So let's go to Okta real quick. Let me know if you own any of these names: Okta, GitLab, ASTS, or SMCR. Okta's up 10%. All right, so we got some numbers there. That's good. SMR is up about 1.3%. That is a nuclear play. They were down about 10.3%. Okta, let me see if I can get their numbers. Looks like they're doing okay. I believe this has to do with security. Identity security is what Okta does, if I'm not wrong. Beat on the top and bottom, 78 cents versus 74 cents expected on EPS. That's a beat. 682 versus 669 expected. That is a beat on revenue. So EPS and revenue, that is a beat. Okta is up currently 10%. GitLab's up 1%. SMR is up 1%. ASTS also up 1.3%. We don't have the numbers for any of the other ones, but at least Okta right here is green currently right now. Cool. Okay, so we'll wait till we get some of these other earnings that should be coming out in just a second. Let's take a listen to Brynn Talkington, who is one of my favorite analysts, and what she's doing on good old Palantir.
Brynn has really been at the forefront of the momentum sell down, which people have tried to say is done. It would appear not. Vertiv, Vistra, Constellation comes to my mind. One is that we're down again sharply today. This one tried to get something going here and is failing.
Yeah, I think when a company, even when the fundamentals and the growth is so strong, goes from $25 to $115, and it kind of defies gravity in terms of the 50, 100, and 200 day. You know, I think the 200 day on this name is about 49, 48. And so there's still a lot it could fall. You also had a lot of insider selling last year. I think they were just as surprised. And so I think this is where investors need to understand, what are you buying? What price are you buying? And be respectful of the price you're paying relative to the fundamentals. And I still think, I like Alex Karp, he's great. All the good things about the company. It still is in nosebleed territory at this point. On the remaining shares I sold the 110 calls that expire in April. I have all the confidence in the world that won't get called away. So I'll just continue to sell calls and collect really good premium on the shares I still have.
Let's not, devote the whole conversation either to technology.
So, I mean, look, Brynn with a pretty mature take right there. Basically, her argument is, look, I think that all-time high that we got on Palantir at 125 was pretty aggressive. Valuations have valued themselves, right? We got kind of re-rated in the market across a lot of these different names. And now she's selling the 110 call. Now, one of the beautiful things about selling options, and we talk about it a lot on this channel, is that if you can use your shares to make money, that is not the worst thing in a period of volatility, especially if there are plenty of gamblers out there that think in a month Palantir can get to 110. Now, granted, they might be right. And for the majority of 2024, they were right, which is why a lot of people got caught on those covered calls. Steve is a perfect example, who has publicly said that he really got hit in some $45, $50 covered calls. But in times of volatility to the downside or flatness, those covered calls can really print aggressively, especially if you've got people that still feel the stock can move crazily, even if you know that the stock's probably not going to get all the way back to 110 or grow up 30% in a month. So there are ways to sort of generate income on the shares. Same thing with Tesla right here. You can sell calls against it. Same thing with Coinbase. There's a lot of it, even Nvidia. I mean, even buying the dip on Nvidia, you can reduce your cost basis just by selling calls against it. Not the perfect strategy when the stock is getting hit. Obviously, you still have to deal with the capital losses, but it mitigates some of the pain. Nonetheless, the fact that some of these analysts are starting to get to the point where they can't even see a Palantir making a recovery back to 110. I mean, the way she said it was like, yeah, there's no way Palantir is getting back to 110. Just goes to show you the type of market that we're in, which is that people have re-rated these stocks and they are not fans of believing that they can just make their all-time highs as easily as before. GitLab numbers are out, and that is down 5.7%. GitLab is down 5.7%. Let's see if we can get those numbers from GitLab and see what we've got going there. We looked at Okta. GitLab don't have their numbers yet. They should be coming out soon, but do not have it yet. No, never mind. It's out. All right. 33 cents versus 23 cents. That's a beat on EPS. That's good. 211 versus 206. That's a beat on revenue. Again, this is like, I mean, how many it has to be closer to like 80% at this point. Oh, GitLab's pumping. They're pumping. Now it's up 3%. I was going to say that there's got to be like at least 80% of companies that have had a double beat. Almost every earnings that we have covered is a double beat or a very slight miss on one of the metrics. Very few companies have had egregious misses. So earnings growth continues to be good, but market's not really looking at that. All right, it went up 5%, then it came back down 2% after being down 5%. So net, it's still down 3%. Still trying to figure out where the stock is headed, but it looks to be negative. Okta definitively is green. That's up 12%. Looks like their numbers were impressive. SMR is still flat. ASTS, I don't think we have their numbers yet. That one is up about 0.59%. After hours right now. Where's TSM? TSM, again, with that big announcement, that's up 0.4%. Pretty much everything's up a little bit in the after hours by about 0.3 to 0.5%. That's nothing too crazy. After this big of a sell-off, you would expect a little bit of a bounce. Even Robinhood's up 1% after hours. But at this point, I don't think anyone is trusting the bounce. I mean, this is not an environment where it's what we talked about in the morning. It's cruel optimism. It's being optimistic, but then you realize the optimism is very cruel because it never ends up kind of playing out. And it's just the continuation of what we saw, at least for those final 2 weeks of February. And really, a lot of this is bolstered by the pain that we're seeing with Trump continuously doubling down on tariffs. Leon Cooperman, we'll listen to him in a little bit. He is bearish the market. He's a billionaire investor. Some of you guys probably know him. He's been selling off. He's been selling into strength is what he's been saying. And he's now 15% cash. So you do have some of the big names that are getting out as well. Here's a quick take on Tesla, and then we will keep going from there.
Track the market today. What started out as a pretty good looking chart has turned into that. When Tesla's down another 5%. You talk about a stock that's had a really tough go of late. That's case in point right there.
Yeah, on Thursday, it dropped to like 270, right here, 279, bounced off it. This is right at the 200-day moving average. I think that with Tesla, this is going to be a great year. If you don't have a position in Tesla, you can establish a position. It has huge call premiums, which I have some calls that expire at 3:30 at April. They're not going to get called away. So you can take advantage of this. So 279 is a good entry point. This company still has many years of growth ahead of it. And I think once you see the Juniper come out, which is the renewed Model Y, we start hearing more about the robotics on Tesla's assembly line. And then also you have the autonomous semi-truck, let's say 1 or 2 years out. I think there's a lot of things that investors are going to turn around and be positive. Historically, if you bought this name when there was blood in the street, you've done quite well on the name.
Are you watching this? Because, I mean, it has been an interesting barometer of sorts for risk appetite, where retail sentiment is. How are you processing all that?
If Elon Musk is the most corrupt individual being adjacent to the president, he's doing a pretty poor job of it for Tesla shareholders. That's for sure. Listen, Brynn knows way more about Tesla than I do. I'll take the over on 1 to 2 years on the autonomous truck. But that said, in the short term, Adam Jonas in the note points out what everyone has observed, which is Tesla sales are down in all its important regions.
Morgan Stanley again named Tesla as their top pick with a 430 price target this morning.
I think you've had a tremendous consumer backlash. You've heard anecdotal stories of people returning their Teslas because now what was once seen as something of a social symbolism now is working in the opposite direction, and the company is dealing with a lot of social issues that are not likely to be rectified anytime soon.
And to his point, I saw this headline today, it was pretty sad to see. In France, there was an arson attack and a dozen Tesla vehicles were torched outside of a dealership. An investigation has been opened into this criminal act, according to the prosecutor's office. So this whole idea that politics is not affecting Tesla, I think, is not correct. Politics is obviously affecting Tesla. Is that the biggest bear case for Tesla? No, in my opinion. I think there's other reasons, like the auto business growing at negative 9% year over year, which is why the street, in a time of multiple compression, is hurting Tesla the most, given its PE is still well beyond Nvidia's or any of the Max 7. However, to say that politics is not having an impact is denying reality. I mean, like obviously it is having an impact, and you can have whatever opinion you want about Elon's political affiliation, but the fact that he is rooted in whatever affiliation he is in, it is leading people to do some pretty horrible things. And so I think that is another risk that has to be factored in when investing in Tesla. Now, granted, I think the long-term trajectory of it should outweigh some of those risks, but that does mean short-term, if you're looking for a better entry, yeah, you might get a better entry on this one if it continues to be as volatile as it is, down 2.84%. It also just doesn't feel like Tesla's ready to go back to 350, just like Palantir's not ready to go back to 120, or Robinhood's ready to go back to 65. Like even Grab, dude. Grab was basically at $5 all day. It's moving so much with the macro, ended at 471. There's no reason for Grab to be down 3%. It's just as these algorithms are taking the entire market down, a lot of these names are going to get caught up in the stray, and they're going to get hit as well. Was what I think is going on across the entire market, and obviously on the highest flyers like Robinhood, Nvidia, Palantir, Tesla, etc. Nvidia right here up a little bit after I was down, up 0.46%. Robinhood up 0.64%. Tesla up 0.3%. SMR is up 0.71%. ASTS is up 1%. Still don't have their numbers yet. GitLab is down 1%. And then Okta still up 12.23% currently right now. Where was HIMS today? I did not talk about HIMS. I didn't even take a look at HIMS today. HIMS was down 10%. Wow. Holy crap. I didn't even take a look at that. HIMS was down 10%. All right. Another growth name that got hit. What did you buy today? What did people buy today? And how are you positioning your portfolio? Let me see kind of what people are saying and how they're navigating this. Are you buying short-term puts? Are you buying calls on something like SQQQ? Are you selling certain stuff? Are you getting into cash? Kind of how are you navigating this? Or are you saying this is a stupid tariff fuel decline that is not actually as serious as some people may think, and as a result, you're buying the dip? I am very curious to kind of see how people are navigating this here. All right, so we got some Rocket Labs. We got SoFi. Edvinas, sorry if I'm saying your name wrong, said he sold everything. Put in the chat if you sold everything, dude. Put in the chat if you just got rid of everything. CrowdStrike is tomorrow. That's going to be an important one. So that's going to be a big one to look out to. Nibbled at some Rocket Lab and SoFi. We got some Google, SoFi, Leaps. I mean, to be honest, if you're bullish over the next 2 years on a certain stock, the time to buy Leaps is when the thing is in the gutter. So I don't hate buying Leaps right here. You just got to be confident by 2027 you can achieve your price targets. We got Nvidia, we got Google, we got Hood. A lot of you guys are saying you're selling covered calls, which I think is very fair. That is not a bad thing to do, especially if people are willing to give you an aggressive premium. We got some other people. Altor said I sold everything. Dr. Jones said I sold everything. Matt says it's all going to zero. Matt, we can't believe you if you keep saying it's all going to zero. Because one day it's all going to go to zero. And we're going to be like, Matt said it was going to happen, but we don't know if he's still believing in this idea that it's all going to zero. Amit, what is Pelosi buying? You know, I don't know. She hasn't really filed in new forms outside of buying Tempest, Google, and Nvidia. When in doubt, I mean, zoom out to Pelosi's portfolio, and she has been buying all the sort of names that a lot of you guys are mentioning: Nvidia, Amazon, Google, CrowdStrike, Palo Alto, etc. The two things she sold were Tesla and Apple. So she's not in those, but she's in the rest of them. And I don't know if she is going to let her portfolio take a multi-$100 million hit, which is what would happen if these names actually fall another 20-30%. We'll see kind of how that plays out. But she is in a lot of these names as well. She is relatively bullish. She bought in the money calls, which are now slightly getting close to out of the money, and they were deep in the money when she bought them. So that's not a good thing for her portfolio. But I guess we're going to find out if she does make any new buys or sells. We haven't seen her sell anything yet, which is also really good. We haven't seen her like get rid of any of these positions, but she hasn't bought or added to any of these either. ASTS, do we have those earnings yet? We are up 3.4%. All right, let me see if I can get some numbers on this one. ASTS has revenue and earnings, right? Like they have actual earnings. Do they? Yes, they do. All right, so here we go. ASTS missed on revenue. It's a small, I didn't know this company produces this little revenue, but nonetheless, Street wanted 2.3. They brought in 1.9. And then Street wanted them to lose 18 cents. So they lost exactly 18 cents. So they came in line with EPS. They missed on revenue. Stock is up 2.4%. I know the big thing about ASTS is they have some massive contract, right, with T-Mobile, if I'm not wrong, some multi-billion-dollar space satellite telecommunications contract. That's like kind of the main driving force behind this company. But looks like these numbers are nothing too crazy on the top and the bottom line. And the stock right here is up about 2%. GitLab is up 5%. All right, so this was down 7%. Having a nice little reversal right here, up 5.2%. Okta's up 13%. Looks like whatever they're saying is getting the street to be very, very excited about their progress. And the rest of these names are basically flat currently after ours. Let's see if I can get some coverage on these specific names. And then we will keep going from there. Trump giving everyone the opportunity to buy the dip. Yeah, I mean, like, what else can you say, right? I guess, I mean, look, dude, it's one of those things where there's not much you can say other than he's doubling down on this. And if he's doubling down, it's not looking like he's starting to go away from this. Let's actually pull up Leon Cooperman and get his thoughts, and then we'll get into some of the earnings stuff, because we do have some other people that are pretty aggressive about this idea that they're feeling unsafe. Actually, let me go to Steve Cohen real quick. We got some new footage from him, and then we'll get to Leon Cooperman. But you do have the big guys, and whether you want to follow them or not is up to you. Obviously, Warren Buffett massively in cash as well, but they are not feeling happy with tariffs, and they are repositioning themselves to basically hedge against the downside.
This is one of those moments where there's really a lot of uncertainty, and I have pretty strong views here. When you take it's a brew of tariffs. I mean, tariffs cannot be positive, okay? I mean, it's a tax, and you can imagine tit for tat. If the U.S. does something, implements a tax on somebody, somebody else is going to, perhaps raise the stakes and raise their tax back. So taxes are never positive. On top of that, we have slowing immigration, which means the labor force will not grow as rapidly as previous over the last, say, 5 years.
And obviously, if we have more deportations, that will hurt the immigration force as well. Here is the update we just got in about the tariffs. Let's get an exact update on what's happening there, and then we'll keep going from there.
To that news just moments ago, the president at the White House addressing those tariffs that are expected to take place tomorrow morning. Eamon Javers has the very latest for us. What did the president specifically say, Eamon?
Scott, the president is in the Roosevelt Room right now, where he's participating in an announcement of a major chips investment, but he's also taking questions from reporters. He was asked about those tariffs set for tomorrow on Canada and Mexico. The president said those 25% tariffs will go into effect tomorrow. So to the extent there had been any drama or suspense about whether the president intended to go through with this or not, he is saying he intends to go through with it. The question is now, will there be any exemptions? What kind of details will we get? What kind of timeline will we get for those tariffs in an announcement tomorrow? We have some sound here from the president just a short time ago in the Roosevelt Room. Take a listen to what he said.
Tomorrow, tariffs 25% on Canada and 25% on Mexico, and that'll start. So they're going to have a tariff. So what they have to do is build their car plants, frankly, and other things in the United States.
The president also taking to his social media platform earlier today to talk about tariffs and the way they might impact U.S. agricultural production. One of the questions in all of this is, if tariffs go into place tomorrow, what reaction can we expect from Mexico and from Canada in terms of retaliatory measures? Oftentimes, countries retaliate against American ag producers. So that's one thing to watch for tomorrow, the impact on American farmers, obviously politically sensitive for this administration. Scott, back over to you.
Eamon, there was some question as to what the exact number might end up being. 25%, of course, the the reported number, but you never know how these things go as you get closer.
Yep.
It sounds like from what the president just said that an 11th hour deal with either country here seems like a long shot.
It does seem like a long shot, but I would say not entirely out of the question here. The president loves a dramatic moment, right? And so, I think we got to watch through the day tomorrow until these are officially put in place. I think just about anything can happen. There could be a negotiating breakthrough. The president might decide there's been progress on fentanyl. What White House officials tell me is the thing he's really focused on here is fentanyl production and traffic into the country. If those countries can demonstrate that they've taken some significant step that appeases the president, then you could see a situation where he might back off of that threat to impose those tariffs. But what he's signaling just now in the Roosevelt room is he's committed to going ahead tomorrow as of right now.
So, I mean, it's just, it's happening in front of us. 78% of you in the poll said, yes, you think the 25% tariffs actually happen tomorrow. I would have to agree, dude. I mean, could there be a 12th hour moment where Trump becomes the savior and he gets rid of the tariffs, yada, yada? I mean, yeah, that could happen. It's happened twice already. It was almost going to happen January 28th, and then he came in and he had a deal negotiated or whatever. At this point in the press conference, he seemed pretty serious. He seemed pretty serious that we are going to definitely implement the tariffs. And I don't know if he's just negotiating here or if it's actually going to happen. But if it happens tomorrow, I mean, I don't know how the markets are going to react, because obviously they sold off, 2% down on the S&P is no joke. So yeah, we got some pain today. Is that just the beginning, or is that market participants that want to get in and buy that dip? Now, here's the problem with the concept of buying the dip. When you buy the dip, you're buying the dip because you feel the market is irrationally taking something down and looking to something in the short term versus the long term. And most people that tend to be long-term investors believe that over the long term, equities will play out in the right direction, given their thesis, which is all fine and dandy. The problem is the market might not be getting it wrong. The market just might be really scared of the uncertainty, which means the question on the person who's buying the dip becomes, what level of certainty do you think will enter into the market that will quell the fears of the uncertainty? And I think if you're buying the dip, you got to answer that question. So for me, buying the dip on Nvidia, my argument is that the tariffs and the export controls are not going to stop Nvidia's S-curve of growth. That is a level of certainty that I personally have as an investor that I believe will eventually outweigh the uncertainties that exist. Now, in the short term, those uncertainties obviously can take the stock down even further from here. But I think that's the question you got to ask yourself. And I think it's a good mental model to walk through that framing of just like, hey, if I'm buying Tesla right now in this uncertain time, the market's not wrong for taking Tesla down. The market's just doing what the market has to do, which is structurally, if there's uncertainty, they stay away. When will the market come back? When there's more certainty? What's going to create that certainty? That's what you got to come up with as a thesis to invest in a certain name. And I think that makes the dip easier to buy, but it also gives a little bit more clarity about kind of what's happening here. Okta's up 15% after hours. That one's really running. GitLab's up 2.4. ASTS up 3.2. Nothing too crazy on their earnings. And then SMR is down 3% after being down 10% here today as well during the day. David says, buy the dip with what money? Well, that's it. Yeah, if you're not in cash or you don't have some cash, then obviously it's not easy to buy the dip. But the point is, if you are looking to deploy some cash, I mean, I think that's the mental model to kind of play it through. But I don't know, bro. Like with the this is the hard part now. And Chris talked about it in the morning. With the tariffs, you have a whole level of uncertainty that I think the market was basically assuming he was going to bluff about when he was running. That's why a lot of people are saying, well, this shouldn't be a surprise because Trump ran on this, and it's like, yeah, that's true, but the market didn't believe it. The market did not believe it at all. I mean, I don't think anyone really believed he was going to put 25% tariffs on Canada and Mexico, even though he said he was going to do that. Everyone thought he was negotiating, and tomorrow will be the day of judgment if he actually does that. Tomorrow is his State of the Union, so maybe he wants to take some radical action to, address Congress and talk about the tariffs as well. But whatever he's going to do, it looks like we're going to get some answers pretty soon as well. Here is an update on Apple and Microsoft and how they're dealing with the tariffs as well.
About 1.5% today. This is because of that additional 10% of tariffs that President Trump mentioned. This is going to be bring the total up to 20%. Now, we know a couple weeks ago, Trump said he met with Apple CEO Tim Cook, presumably to talk about these tariffs. And last Monday, Apple announced that $500 billion investment in the United States. We'll see if that gives them the tariff relief they wanted. But right now, it looks like it's just going to be broad-based and so forth. But look, analysts said with those first round of tariffs, that 10% that went into effect a month ago in China, that would hit earnings by low single-digit percentage points. We'll have to see what they say for this round. I'm expecting a lot of analysis to come in tomorrow morning. But now let's go over to Microsoft, which took even worse than Apple, down about 2% close today. Also, that China tariff impact. On the last earnings call, I'm going to point to some comments from CFO Amy Hood, who warned that Windows revenue could decline to the low to mid single digits because of what she called, quote, tariff uncertainties. Now, as you know this, John, most PCs are made in China.
I did not know that. That's a new quote from the CFO that I'm hearing for the first time with you guys. That actually makes sense why Microsoft is down another 2%. I mean, if tariffs are going to hurt their laptop revenues, that's probably not the best for Microsoft.
And some PC makers at that first round of China tariffs have already said they're going to need to raise prices. You can also see Dell and HP were off quite a bit as well, guys.
All right. Steve Kovac, thank you.
Thanks.
Small cap stocks getting.
Oh, boy. Well, there you go. Doesn't help Microsoft or Amazon either, or Apple. Amit, what is my year to date? Yeah, let's put it in the chat. What are your guys' year to date? My year to date is now 5.3%. 5.3. It was like 18 on Friday. The one thing that's holding me up, dude, is I got these damn Robinhood options. These freaking Robinhood options that are so deep in the money, and hopefully they continue to stay deep in the money. But these bad boys that we got back in 2023, haven't sold them yet. They're up 500%. That's what's kind of saving the port right now because everything else is getting hit. And those fluctuate so much every day. But I'm trying to figure out, how do I not sell those to pay taxes, dude? I got a hefty tax bill coming up. It's the most taxes I've ever paid in my life. I was thinking, all right, do I sell those? But I'm trying to figure out, dude, can I let those ride till 2026 and maybe maximize full value, maybe only sell half of them? But I got to sell something to pay these taxes. So we will see. But everything else, I mean, obviously NVIDIA is getting hit. Rocket Lab's been hit. Tesla's been hit. Robinhood's doing very well. Palantir's doing very well, but I've been in those names for years at this point. So it's not like, and they're still up year to date, to be honest. So that's also helping the portfolio, but everything else has not done that well year to date. What an eventful first day to start off March, dude. You know, Trump said golden age of America. Kind of feels like a golden shower instead. I mean, really, golden age is not really the exact way to describe what's going on right here. It kind of feels like shit. H. Allman says up 11%. We got Robert down about 18%. Low Watt negative 7.4. Min down 20%. I feel like every day we're just going to do year to date. See it get progressively worse if we keep getting this pain. Or maybe we get a little bit of reversal. We're down 30% here. Hershey's is up 20%. Is it? Hershey is up this year? I think you're right about that. Hershey's is... Yeah, no, Hershey's up 5% year to date, which is better than Nvidia, to be honest. But still, at least we're kind of green. All right, so let's do this poll in the chat. Let's do this poll. Here's a new poll. What'd you guys say on the last one? Okay, 80% of you said yes. All right, so let's do this poll. Are you now actually bearish 2025? That's a good question. Are you bearish, meaning S&P goes negative for the year? Are you bearish S&P going negative? Because I think that's the definition of being bearish, right? You think that the S&P is gonna go negative. So let's see. Let's see what some of you say right here. 61% say no. All right, so we're still bullish, which I think is fair to still be bullish. I think if you're super bearish at that point, you just kind of sell everything, right? Now, granted, I do think it's kind of, I don't know, maybe I'll be wrong on this, but like I feel like it's kind of late to sell, right? If you were going to sell, it was even 2 weeks, even 1 week ago would have been a better sell than now. Now it's just like you're selling into weakness, not strength. Like selling Robinhood at 45, does that make sense? Like really, when it was at 65, like, because it's a hell of a lot cheaper at 45. Could it go to 35? Sure. And if it goes there, I think that's more of a buy the dip than wish you would have sold at 45. But 65 was the time to get out, or at least 50 or 55 or whatever. You know, it's like And granted, it was at 54 last night off the Trump pump. So I don't know. I don't know if the selling right now makes a lot of sense unless you just want to raise cash and hold on to it versus necessarily being scared of things that have already come down so much right here. The negative GDP growth by the Fed, that or by the Atlanta Fed, that news is not good. Obviously, 2 quarters of that consecutive can create a actual recession. The question becomes, do the implications of that legitimately lead to a recession? We have non-farm payrolls on Friday. Goldman Sachs is expecting 170,000 jobs. If we come in below 100,000, which, you know what, it wouldn't surprise me because CPI has been hot, PPI has been hot, PCE has been okay. Then that's the one the Fed cares about. Well, we need CPI and PPI to normalize as well. And then initial jobless claims have been higher than expected as well. So it wouldn't surprise me if we get an ugly non-farm payrolls, especially with all the ISM and PMI data we got this morning. But I'm hoping that we have at least 120 to 130,000 jobs. If we have below 100,000, then we're going to get some cuts. It's just those cuts are not going to be for the right reason. Here's another reason why people are feeling a little bearish. Citadel and Millennium lost money in February. And if you know anything about Citadel and Millennium, these are massive hedge funds / market makers that keep the markets in check. They provide liquidity. Citadel is not trying to get into the crypto market making space. They don't lose money. Like, the one thing they're really good at is not losing money. And because the S&P 500 dropped 1.4% for the month, Citadel was down 1.7% and Millennium was down 1.3%. So, you know, granted, they had 2 really good years, 2023, 2024. So, I mean, just like we are now starting to go negative in the month of March, or a continuation from the past 2 weeks of February, so do the big guys, right? They're not prone to necessarily being perfect and going positive when everyone's red, especially if they're controlling liquidity of the markets, because they own a lot of these names that are getting hit. But still, they usually hedge well enough to inch out a profit. And even Citadel and Millennium were like, yeah, we went negative for the month of February, which just shows you how bad that month was. And I guess we're going to see if it continues into March. Cactus Jack, thank you for the $5 super chat. Buffett today on tariffs. They're an active war to some degree. Over time, they're a tax on goods. I mean, the tooth fairy doesn't pay them. You know, I saw this headline. I forgot to mention it today. Buffett did say that. He had an interview with CBS. And yeah, he said exactly what you're seeing right here. They are, in a way, an act of war. Now I kind of get why Buffett's in cash. I mean, I think for the people that were kind of struggling to understand exactly why he's in cash, this interview kind of makes it clear. I think he's afraid of tariffs. I think it's that simple. In a CBS interview, Buffett warned that tariffs could fuel inflation and hurt consumers, calling them excise taxes that don't magically pay for themselves. The tooth fairy isn't going to come and pay for it. And then what? In economics, you always have to ask, and then what? So, I mean, obviously Buffett is not happy with the tariffs, and that probably explains a little bit more why he's currently staying in cash to the tune of $300 billion. Let's get an update on auto tariffs, and then we'll keep going from there.
Over the next couple of days, just how quickly automakers, at least some of them, may decide whether or not to pass along a 25% tax, some portion of it or none of it, to their passengers, or their customers, I should say, in the form of new prices on vehicles. When you look at the number of vehicles that are manufactured in North America, the bulk of what's sold in the U.S. is built in the U.S. But Mexico at 16%, Canada at 7%, put those together, basically 1 out of every 4 vehicles sold in this country are coming from north or south of the border. So what we've been told by those in the auto industry, and I've talked with people at a number of different suppliers and automakers over the last couple of days, they're building inventories. They've been doing that for some time so that if they need to get vehicles across the border, they've done that as much as possible, or parts close to plants in Canada or Mexico, they've done that as well. Auto prices are unlikely to immediately change. At least that was the expectation as of earlier today. We'll see if that plays out over the next few days. The automakers and suppliers, they're going to be in a cost influx because the suppliers are saying, we're not going to eat all of this 25%. You got to pay some of it. The automakers are saying, wait a second, we're getting hit ourselves. So they're trying to hash that out, the automakers and the suppliers. Take a look at GM, Ford, and Stellantis. Keep in mind that the automakers, a little better position than the suppliers because they have some capacity that they can shift some of their production to here in the United States. And then finally, as you take a look at Toyota, Honda, and Nissan, we should point out, it's almost every automaker that's impacted here. It's not just the big three. Yes, the big three have more exposure than some of the foreign automakers, but the foreign automakers are taking a hit too. And there are some popular vehicles that are.
Now, with all that bad implications of what it means when it comes to tariffs, here's a headline that crossed the news today as well. Honda looks like they're going to be producing their next Civic in Indiana, not Mexico, due to U.S. tariffs. Now, this is good, right? We want Honda to create cars in the United States, not outside of the United States, which is Trump's whole goal of creating tariffs. The problem is, if the majority of Honda's cost of goods go up because of creating in the United States, how many tax benefits do they get? How much tariff relief do they get to actually be able to make a profit? When, if you know anything about auto manufacturers, they barely get like a 5 to 7% profit. And then does it actually increase growth for them in sales for them to be able to rearrange their supply chains to build in the United States versus internationally? Obviously, Trump has his opinion on that, and he wants more made in America. And so that's the route he's going down. But nonetheless, that's not definitively bullish for the auto manufacturers that for the past 30 to 40 years have been manufacturing outside of the United States. Here's an update on Amazon as well. We heard Tesla, we heard Palantir, we heard Apple and Microsoft. Here's what Amazon is dealing with when it comes to tariff fears.
Taking a hit today on this tariff news, stocks down almost, actually now more than 4%. That's about double the losses we're seeing from the rest of mega cap tech at this point. It is a knee-jerk tariff reaction. The story here, investors are expecting goods just overall to get more expensive on Amazon's e-commerce side of the business. That could slow down sales and hit what has been a really solid margin story at Amazon. So North American margins, which is pretty much the whole e-commerce business, those have been expanding in previous quarters. They had gone negative. If you think back to sort of the COVID era, they'd gone through these major investment cycles. It started to pay off. It's been a big part of the bull case for Amazon. And you got to look at third-party sellers here. That's a big part of this. More than 60% of all of the items sold on Amazon are from those third parties. So they may be the ones absorbing more of the cost, passing that on to consumers, and then Amazon does sell fewer goods directly if you compare it to sort of a Walmart or a Target. And the bulk of the items do come from China. When you look at those third parties, Roth, for example, has estimated it's 30 to 40% of those who sell on Amazon import directly from China. Then you also have the Mexico and Canada factor as part of that, Scott. But as I mentioned, down more than 4% at this point. Back to you.
That actually makes sense. I didn't even realize that Amazon has to deal with all the tariffs, right? Like a lot of Amazon has third-party products that are coming from China. So that actually makes sense why it got hurt a bit more aggressively than the other Mag 7 today, down about 5%. Why? Because, a lot of their goods will be tariffed now. And that will hurt either profit margins or they're going to put the cost on the consumer. And if they put the cost on the consumer might not start buying that much from Amazon, which overall hurts growth. Whatever Trump's plan is to make tariffs work, we're going to see a real-time case study on if it actually works or not. And I don't know if it's going to work, but we can only do what we can do by reacting to what's happening right now. Max says, Amit, can I trouble you to Uber us all some ramen tonight? If I could, I would love to Uber Eats everyone some ramen tonight. Maybe that would be a little cheaper, even on Uber Eats, given that's what we're going to be eating for the next couple of forget months, dude, years. This is 4 more years of this volatility. Granted, I'm being hyperbolic here. Obviously, I do think there's going to be some good stuff that happens from the Trump administration. Oh, here. Okay, let's see if you guys think this is good or not. So here's another piece of news in the theme of deregulation today. The SEC is offering $50,000 to buy you out. So if you work at the SEC, they want to give you $50,000 to get the hell out and to retire by April of 2025. It looks like the SEC is going through a major change. They're putting in a lot of new people, and the Gary Gensler types of folks that would aggressively pursue a Hood or a Coinbase to interrogate them and essentially bully them, which has, Vlad and Brian Armstrong have kind of admitted that the SEC is just not acting in good faith. It looks like those are the people that they want to get out, and they're willing to give you $50,000 to resign by April 2025. Is that good? Is that bad? I don't know. To some extent, I think, more deregulation in the SEC is good because you have companies that can continue to innovate in financial services, but sometimes it's kind of be careful what you wish for. Are we really going to be okay with not having the level of enforcement that we've had over the past couple of years? And I guess we're going to see. That is up to interpretation still. But yes, the one thing I agree with you, Nathan, it creates more uncertainty. Maybe it saves us some money to an extent, right? But it absolutely creates more uncertainty as well. So, yeah, they're giving you a Honda Accord. Yeah, dude, Hondas. All right, dude, Tesla's like, again, with the tax credits, Teslas are still cheaper. Not literally cheaper than a Civic or an Accord or a Corolla, but it's competitively priced. Like it's not like a Mercedes versus a Toyota or something. It's with the tax credits, especially if you live in like Colorado or California, there's some really nice incentives to get that price to come down. If Trump gets rid of the $7,500 tax credit, I think that is going to be it's just not going to be pretty for Tesla, because already we know the auto business is slowing down. We know Tesla's doing tons and tons of different discounts to be able to get people to start ordering. Obviously, I'm bullish on Juniper and the Model Y. I don't know how much of those they're actually going to sell to be able to make a year-over-year growth trajectory for deliveries. Elon said they can grow 20% year-over-year. I'm a bit skeptical they can do that, but we're going to see. Granted, it's an easier comp because of last year's numbers being lower. But if they get rid of that $7,500 tax credit, like my dad is thinking of getting a Tesla. I'm thinking of buying my dad a Tesla, and we're getting like serious conversations. I'm finally letting him. I'm finally convincing him to let me buy him the Tesla, because my dad has too much pride and he doesn't want me to buy anything for him. But like, you know, I can afford it, and so I want to buy it for him. But he's not gonna let me buy this thing if we don't get the $7,500 off. He's, you know, my dad comes from an era where you pay the least amount possible. So if his stock portfolio is already down like 30% from the highs, so he's already feeling like he's poor. So if we don't get that $7,500 off, I can guarantee we're not buying a Tesla. There's no way he's going to let me buy it for him. So I think we got to figure out. I just really hope Trump doesn't. And Trump said he would do that. Maybe he reconsiders given all this volatility. Hopefully he does, because I just don't think that's going to be pretty for Tesla. But we got to see. We got to see how this ends up happening. Grumpy Head, thank you for the $50 super chat. There are studies and evidence that airline pricing algorithms learn game theoretic collusion on their own to avoid antitrust laws. Tariffs aside, don't be shocked if CTA algos do the same in short-term trading to avoid market manipulation laws. I am so happy you said that, and I 1000% agree with you. There are so, I think Grab is the perfect example. Grab's up 3% on the day. It's been trying to hit $5 for the past couple of weeks. Every time it touches it, immediately gets rejected once you get a piece of news that creates some shock in the market. And then a stock that really is not affected by that, like should not be affected by that, completely gets hit. And it gets back to levels that it was at a couple of weeks ago. And I think a lot of that is based on manipulative algorithms that are trying to not be manipulative, but nonetheless end up manipulating. And it's high frequency trading algorithms from market makers that want to get certain prices in certain areas. Now, granted, there is enough uncertainty to justify some of that volatility. I don't think anyone can deny that. Yeah, if Nvidia is getting investigated by China, the United States, and Singapore, probably it's going to sell off. But the way it sells off, it might consolidate at 117 for an hour to make you think that, all right, 117 is good. Then they take it down to 114, which is basically what they did today. Like, there's just a lot of nuance to how this is playing out. And unfortunately, with retail, unless you're on a high frequency trading algorithm on your own setup, the best thing you can do is DCA, right? Like, that's really the best way you can compete with these guys. You can obviously sell puts and calls. I think there's ways to navigate it from that perspective, but to play them at their own game is tough. And right now, these guys are winning the game. Tesla right here up 1/3% after hours. Okta still up 15%. GitLab is up 5.2%. Let's get some coverage real quick on Okta, which is getting a little bit of market momentum right here. Again, security SaaS name. Let's take a look at this, and then we'll keep going from there.
Are out. Seema Modi has those numbers. Seema.
Hey, John, this is the security cloud provider that reported better than expected earnings, a 4-cent beat on its bottom line, revenue coming ahead of the average analyst estimate. And its first quarter guidance was also above Wall Street expectations. RPO, which is a measure of subscription backlog, was a standout. And amid this tough backdrop, worth noting, shares are up nearly 13.5%, 14%. JP Morgan did make the point going into this report that this specific company, and especially given the magnitude of hacks that we've been seeing in recent months, is well positioned in the security market. Stock again higher in overtime. John and Morgan.
We got Dan Ives on CNBC right now as well.
I mean, we expected we were going to get a chip-related announcement from President Trump this afternoon, and that was really when we saw the speculation that maybe it's going to be increased export controls on the likes of Nvidia and some of these advanced, semi-related products. Instead, we got this $100 million investment from Taiwan Semi, but that fear is still out there. And it's kind of interesting because we have export restrictions on quite a few countries, but apparently not Singapore.
Yeah, and I was just there on Friday, right? So I could tell you the sense is that these export controls, it's not going to be really constrained to ultimately Singapore. And I think the fear here, and I think you're seeing on the Nvidia sell-off, is that this is going to be a huge ripple effect. It's going to be harder and harder to get those chips. That's something, even though there's the China piece, it could have a much broader impact across the region. I think bark's worse than the bite. I mean, as someone, in Asia for 2 weeks, I think it's when I get the fears, but I don't think this is something that's really going to be as much of a restrictive factor, despite everything we saw today.
Do you think it's deep-seek concerns that are spurring this next wave, potentially, of regulation? And I guess perhaps just as importantly, has the train already left the station when you look at homegrown chip development in a place like China?
Look, I think DeepSeek, that was a shot across the bow because I think everyone recognized, okay, they didn't do this in the basement with no chips. And it comes down to if they use next-gen NVIDIA chips, what does that mean? And I think, look, the broader fear, especially that you see in the Trump administration, is, okay, we got restricted more and more. So I think what you're starting to see from an investor perspective is, okay, what does this mean for NVIDIA? Second derivatives. Is this going to crimp the supply chain? Now, we disagree. I think when it comes to tariffs, we've seen many times, this is one, it's going to have an impact, but I do not believe it's going to have such a pronounced impact. I think it's being factored in here in terms of supply chain. Still 15-to-1 demand to supply, even when it comes to Blackwell.
Well, okay, bark is worse than bite, but still a bark can be pretty bad if it hurts sentiment, right? If it sort of puts a wet blanket on the party, has an impact on valuation. At what point does it start to do that? And do you have to, if you're an AI investor or even NVIDIA investor, have to get less bullish?
Yeah, look, I mean, no doubt you're going through a lot of turbulence here from a sentiment perspective. You're seeing the stock, then it becomes self-fulfilling prophecy. But what I'll tell you is it comes down to just demand. Do we see any changes in spending? That demand's going to continue to be there. And I think it's when there's only one chip in the world that ultimately could fuel this. I get we're going to go through this, but in my opinion, these are opportunities, not the time to run for the hills. I think when you look at it in terms of tech winners, if you look over the years, it's period like this and these white knuckle periods that you own the winners, you own the NVIDIAs.
Well, speaking of a company that's been through cycles like this, Apple, right, on the client side with AI versus on the data center side, it's the biggest premium consumer product company on the planet. And boy, could things get more expensive, iPhones get more expensive under these China tariffs. How much of a threat is that for a company that has some different ways to sell phones, has a lot of cash to do some subsidizing of the debt necessary to help consumers do that?
Yeah, I think we believe there's a 90 and 95% chance that ultimately there's loopholes that they're not going to really be impacted in terms of iPhones from the tariffs. I think very similar to what we saw in 2019. Cook, it goes back to 10% politician, 9% CEO. I think they could absorb, if they actually had to, some of these tariffs with no sort of passing that through to consumers. The bigger issue is if this lasts till September, until actual iPhone 17 production, that's where it gets a little more, I think, nerve-wracking. But as of now, we believe that there'll ultimately be loopholes that Apple is not impacted. And that's why you're seeing the stock not really reflecting too much negative because the investors are kind of reading through that.
Only 10% politician?
Maybe 50, I'd say 10%, maybe the last few weeks, 20, 25% politician.
But that other CEO piece, it's like 60% supply chain focused CEO, right? All right, Dan Ives, thank you.
Yeah, thank you.
One outperformer in today's pullback, well, European.
What do you guys think? What do you guys think? Does Dan Ives bring you any comfort there? To be honest, no one can bring any comfort right here. Look, Dan is talking the same stuff he's been talking for a long time. I don't disagree with anything he said. Granted, nothing that he said is that different. The one thing I've kind of disagreed with Dan on historically is Apple, right? I've just never been a big fan of Apple. But in terms of his broader thesis on the AI revolution, tech, etc., I think he's right. I think he's been right for the past couple of years, and he's going to be right. But given the past couple of years, we're so bullish. This is a bit of volatility that we're facing. Now, granted, even in the face of this volatility, I hope everyone kind of like understands where the market is still trading at. We are down 0.32% year to date on the S&P. That's just not that's not even a, forget correction. That's not even a pullback. Like that's nothing. That is literally nothing. It is bad if you like literally, bought at 6,100 or whatever, but it's still not like egregious. It's not even close to what we experienced in 2022. By this time, 2022, the S&P 500 was already down, I think 4 to 5% year to date. Then we ended the year around 19%. We topped out in literally on January 1st. We were at 4780 on the S&P, and then it was just a harsh path down. So like in the face of all the volatility on individual names, the fact that the fact that Nvidia, whether like Nvidia is the prodigy of the stock market, Nvidia is down, 700 billion year to date, and the stock market's down 0.32%. It's like, it's what I know it doesn't make people feel better. I get it. It doesn't make me feel better either, but it gives me a little bit of sense of like, this is not a market that is in a bear market or is in a corrected territory. This is a market that fundamentally has started to rotate, and financials have caught a bid, real estate has caught a bid, healthcare has caught a bid, utilities have caught a bid, defensives have caught a bid. Tech has not caught a bid. Objectively, tech has been nasty, but that doesn't necessarily mean that the broader market is as nasty, even if tech is pretty bad. Nasdaq's been hit worse. Yes, definitely the Nasdaq's been hit worse, obviously, because tech is, Nasdaq heavy. The S&P is a little bit more diversified. Nasdaq year to date, but even year to date on the Nasdaq, it's down 2.5. I mean, yeah, it's not amazing, but it's also just like not, I don't know if it could be the scariest. This is again the heat map of the S&P. Let me go year to date performance. Look at this year to date. Look at this. You saw how the majority of it just went from red to green. Let me do it again. So this one was performance by day. We had a lot of red outside of pharmaceuticals today. If I go year to date, banks are green. JP Morgan, Bank of America, Wells Fargo, Goldman Sachs, etc. Pharmaceuticals, Lilly, AbbVie, J&J, green. Tech, down, but you got retailers like Walmart, Costco, very green. Meta's the only one that's green really in tech. Obviously, Palantir is green as well. It's just not necessarily big tech, but still, Netflix is green. Oracle, Salesforce, Broadcom, Semis, Apple, Nvidia, Microsoft, those are down, but consumer non-durables are up. Transportation is up. Energy materials are basically up. Communications are up. Distribution is up. Utilities up. Commercial services up. Retailers are up. Healthcare technology is up. Like the consumer is in trouble. Walmart and Costco, for some reason, are catching a bid, which might be a bubble, to be honest, people paying this much for those. But like, it's still one of those things where it's like, as bad as it is, and I know people are super heavy leveraged, or not leveraged, but exposed to tech. Some people probably with leverage, but it's not the entire market. Even if Tesla is down 27% year to date. So there you go. That's what we've got right now. Star Buccaneer says US tech has always been the best investment. I agree. And that's why I think this dip ends up just being an opportunity. I know people hate hearing someone say that the dip ends up being an opportunity, hopefully on this show at least. And we went through the numbers last week. We looked at the forward EPS estimates and forward price to earnings ratios of every Mag 7 compared to the stocks that are up this year. And they're all lower than what we looked at on Friday because all these stocks are down another 3%. They are dirt cheap. It's just that's outside of Apple and Tesla. Again, Tesla. Let's exclude Apple and Tesla. Everything else is cheap. And you either buy into that or you wait. And there's nothing wrong with waiting. But it's kind of one of those things where it's not like, I don't think Google at 170 is the top. I mean, objectively, it's not the top. 220 was closer to the top back in January. So you're getting a discount. Now, the discount may get worse, but it's not like you're paying a crazy expensive multiple for some of these names, given the earnings growth that they're putting up, the free cash flow they're putting up, and the buybacks that they're engaging in as well. Cool. So I think that's what we've got going on right now. Let me. So I want to end with two things. First of all, I want to end with this, which we didn't finish right here. So I played a minute of this. I want to go back to this right here. I want people to hear why Trump is so steadfast on tariffs. You can agree or disagree with it, but this was the final question he took at his press conference today. And this is why he keeps saying that if we don't do tariffs, the country is screwed. And either you can believe it or not believe it, but here's what he had to say. Then we'll listen to Leon Cooperman and why he's in cash, and then we'll be done for today.
Talking about the fact that they're lowering their yuan, they're lowering it down, and that makes it very, very hard for us. So this way, I just say, look, let them do that, and we make up for it with the tariffs. But yeah, sure, I will. I have a lot of respect for her. I have a lot of respect for her.
Mr. President, take effect. It'll be 20% on China now. How high are you willing to go against China?
Well, I can't say. It depends on what they do with their currency. It depends on what they do in terms of a retaliation with some kind of an economic retaliation, which I don't think they're going to retaliate too much. Hey, look, the United States has been taken advantage of for 40 years. The United States has been a laughingstock for years and years. That's why this gentleman is built in Taiwan instead of building here. It would have been better if he built here. If we had a president that knew what they were doing, and we had a lot of them very bad on trade. Look, I'm a huge fan of Ronald Reagan, but he was bad on trade, very bad on trade. He allowed a lot of people, a lot of businesses to be taken. So I say that with due respect because he was so great on other things, but he was bad on trade. We are setting records right now, records like nobody has ever seen before. When you have companies like this coming in and almost 40% of their company in one signature is going to be devoted to what he does, which is one of the most important businesses in the world. That's an unbelievable thing. When Apple now is going to start building all of their plants here, all because of what we've done in terms of, it's not because he likes me or they like me. They don't probably like me at all. I don't know. I think he likes me a little bit at least. But you know what? It's the incentive we created or the negative incentive. I mean, it's going to be very costly for people to take advantage of this country. They can't come in and steal our money and steal our jobs and take our factories and take our businesses and expect not to be punished. And they're being punished by tariffs. It's a very powerful weapon that politicians haven't used because they were either dishonest, stupid, or paid off in some other form. And now we're using them. Say it.
Have you spoken with President Xi about this term?
I don't want to tell you that. Thank you very much, everybody. Thank you. Thank you.
So that is his argument. For those that have still been wondering, why is Trump so gung-ho about tariffs? His argument is that countries are devaluing their currencies. Someone right here is asking, why would tariffs protect against that? Well, if China can devalue their yuan and as a result have cheaper cost of goods to make their products, which is why Apple wants to build the iPhone in China, that doesn't matter if there's a 25% tariff when you import the iPhone into China. This is why, or into America. This is why Trump has been so upset with Tim Cook and all these guys, and he's wanted further investment from them because he knows that they only want to make their stuff across the world because those currencies have been devalued artificially. This has been like a proven fact that has been happening. And as a result, you have cheaper labor costs, cheaper cost of goods in general. If you have a tariff, it doesn't completely mitigate that, but it at least somewhat attempts to not allow the competitive advantage that these countries are gaining by devaluing their currencies to insinuate themselves in perpetuity. Now, look, there's a lot of nuance to that. What I said right there can be argued back and forth. There's counter arguments to that argument I just made, but that is Trump's perspective. And if we're going to have a president who has that belief that Americans are getting ripped off based on devaluing of currency and a variety of other things that some of these countries are doing to gain competitive advantages when it comes to manufacturing, tariffs is his only solution. I mean, he doesn't have anything else, and that's what he campaigned on. And if that's what he campaigned on and that's what he's going to do, I guess we're going to see how it plays out. Martin says it's still inflationary. Yeah, I think economists believe that as well. It's not like it's not inflationary. I do think they can get the 10-year down well enough to be able to control the long end of the yield curve, but we're going to have to see how this ends up fully playing out. And, we got to see, is there going to be more growth that can compensate for that inflation as well? I think that's another question that is going to be very important. And we will find that out in the coming weeks. Steve said he needs 1 minute, so he'll be joining in just a second to give his thoughts. But he'll be on the show, and then we'll end it out for today. But like, so let me do a poll. This who agrees with it now that you've heard his analysis on why he thinks America needs tariffs as their last resort. Who agrees with it? Because if you agree with it, then I guess you'll roll with the punches. If you disagree with it, then you get to say that Trump's economic policy is stupid. Do you agree with Trump on the tariffs? And if you don't, I mean, I guess the question is, what is the other way to be able to generate the types of revenue we need to get out of this deficit? Because Trump also is bullish on tariffs because he thinks, okay, two things are going to happen. Number one, we're going to make a shit ton of tax money, which can fund the tax cuts that he wants to get through. Or B, if the countries don't pay those tariffs, they're going to start bringing their jobs back to the United States, which is some isolated examples we're seeing that's beginning to happen. The caveat to that is if they bring their products to the United States or their supply chains, will things actually get more expensive for consumers? Like if Apple makes their iPhones in the United States, do we have to pay $2,000 per phone? Because like the reason it's $1,000 is because they get cheap labor from China. And if we don't have to pay $2,000 per phone and we still have to pay $1,000, do their profit margins go down so Apple shareholders get hit? Like one side of the party is going to get hit. Either it's the consumers, either it's the shareholders, or either it's the overall supply chain that's going to flip overnight. But like this is such a nuanced thing. This is why tariffs are such a controversial topic. And I don't even think the Trump administration fully understands how they're going to do it, but they want to be in this side of the aisle. The question is just which side of the aisle is going to be the best for the American consumer over the coming years. And obviously they think it's going to happen with tariffs. Okay, Steve said he'll call me in a minute. Cool, sounds good. So he'll call in. But that's what we're seeing right now. All right, so the poll, 60% of you disagree with Trump on the tariffs. All right, well, we're going to find out how this plays out, dude. We're going to find out how this plays out. Styles says, Amit, I just woke up. Can you give a synopsis on what happened today? Tariffs. That's it. That's the only headline you need to care about. Literally, dude, let me show you a picture to prove my point. Literally at 3:03 p.m., Trump said 25% tariffs on Canada and Mexico. Look at the S&P 500. Look at that. Low of the day at 3:03. And I think we ended, did we end above that? S&P 580, SPX. We ended just below that. Just below that. So, I mean, that's it. That's the headline. Nvidia had their own export control headlines, etc. But that way, also the Bitcoin thing completely reversed. I mean, that thing didn't play out. Hopefully we'll see if it does play out. But yeah, Bitcoin's right back down to 85K. No one, whoever was leveraged, I hope to God, that person I told you guys today that was 50x leverage, that if Bitcoin were to fall 2%, they would be wiped out of $200 million. Bitcoin's down 7.5%. I hope they freaking sold, because if not, they probably lost a lot of money. Steve, good afternoon. How are you?
Hello, man. How are you?
I'm doing good. The chat was really looking to get your opinion on the market activity that we saw today.
I mean, I was tied up in a lot of things, and I really didn't see anything. I didn't watch press conference, or I mean, this is all the eve of the tariff jitters and everything else. I mean, I'm a long-term investor, so I guess I have ice running through my veins because I could care less about what happens there. You know, I bought more Nvidia. I know you made some moves, and if it keeps going down, I'm going to buy more. I think this is good for long-term investors because they're just going to buy the dip. Traders are the ones that are being hurt right now.
Okay, so the majority of what happened today, given you were in meetings, was tariffs and a doubling down on tariffs by Trump. Do you think this matters at all, or?
No, he told everybody he was going to do this. You know, it goes back to what I said to you the other month. People who didn't think that he was serious about any of this stuff, like, he gave you the game plan. He told you what he was going to do. You got to expect it. And plus, we're still in the first 100 days. I think people are still getting used to him being on the news cycle 5 times a day, if not more. And there's so much more to keep up with in the previous administration.
Dude, as a content creator, I've tweeted about him like 7 times today, because he keeps saying stuff and it's like important, right? So it's
so you didn't have this from the last administration. So I think people are digesting how to navigate through it. And look, every time he says something, it impacts the market at this point. Information flows a lot faster than it did in his first presidency. And there's a lot more people paying a lot more attention about a lot of things. I mean, you also have, what do we got? The job report coming out on Friday. You got
We had ISM data today that was kind of nasty, wasn't the best.
These fucking people. Like, seriously, driving in New York City is so annoying.
You know, you never curse when you're on the air, but road rage, any New Yorker, that'll do it.
It's not road rage, it's just stupid people.
You literally just said these effing people, and now you're calling them stupid. How is that not road rage? That is
because they're beeping at me for no reason. Like, I'm in a left turning lane. What do you want me to do? Go straight?
Okay, well, Leon Cooperman is going into cash. What do you think about that?
Yeah, I heard something about that. He's leaving most of his money to charity. He believes in what is being done, but he doesn't necessarily like how it's being done or something like that. I don't really care. Whatever.
Okay.
What he does, what other people do, doesn't impact Nvidia, doesn't impact Amazon. I mean,
well, let me read you what your favorite investor of all time, Buffett, said today.
Oh, God.
Buffett said in an exclusive interview with CBS, he said, oh, you didn't hear this.
Whoa. You said CBS.
Correct, not CNBC.
Okay, why do we care?
Well, regardless, this is what he said, okay? He says tariffs are an act of war. The tooth fairy isn't going to hold on. Let me just finish.
I don't want to hear it because tariffs. How is tariffs an act of war? If another country puts a tariff on our products going in, why shouldn't we have a tariff on their products coming in? How is that an act of war? It's protecting our companies.
Well, his follow-up is that the tooth fairy isn't going to pay for it, and then what? In economics, you always have to ask, and then what? So his argument is the same thing that I think the market's wondering about, which is who the hell is going to pay for these tariffs? Is it going to be the consumer? Because the consumer doesn't have money. Is it going to be the employer? Because the employer is going to lay off people.
But you know what? Maybe it will create opportunities for American companies to compete and create more jobs.
Well, that's Trump's argument, right? So
if you make it where foreign companies are able to get their product into the U.S. for pennies on the dollar, yet our products go over at a much higher tariff, maybe that creates an opportunity stateside, and maybe you have American-born companies actually able to compete on American soil in the same sector. What a shocking revelation.
So that's the hope by Trump. I think the market is scared that, let's say Apple were to make their iPhone in the United States. The iPhone would get more expensive, right? Because you're not paying people 5 cents an hour anymore. And as a result, the consumer's not...
news for you. If Apple made their phone stateside and they cost $100 more, I would still buy a new iPhone. I'd be happy to buy another iPhone because it's creating American jobs.
Well, you've done well in your life. I don't think the average person can just naturally
I'm just saying that, this could be a good thing.
No, I agree. It could be a good thing. But I think the market's thinking that it's not going to be a good thing. And that's the volatility. Granted, long-term is all that matters for a lot of these names. And I think Nvidia will be fine. Google will be fine. But still in the short term, that's how I think how the market's predicting this is going to play out, which is that tariffs are going to be retaliatory. And it's just going to turn into a trade war and no one's going to win.
Well, it's not really retaliatory considering that we don't have fair trade.
That is Trump's point as well. That's fair.
But it's a fact, though. If you put a 10% tariff on products coming in, but there's a 50% tariff on products going out, that's not fair trade. And keep in mind, America is the one with the buying power. Okay? If these companies and these countries don't get their products over here, they lose.
Yeah.
So I don't think that this is going to play out how people are making it out, how they think it's going to play out. I think it's going to play out much differently over the next couple of months.
Why do you think the export controls are hurting Nvidia so much?
I mean, the whole thing with Singapore and ships ending up in China?
Yeah. Is it a real bear case or not, in your opinion?
This is what I'm going to say. People get illegal substances over the U.S. border all the time. You think that they're not going to get microprocessors if they want them?
I mean, they probably will.
To me, that's not an Nvidia thing. That's a trade thing that Look, if Nvidia did not directly sell chips to China, it's a nothing burger.
Well, so is that a reason for why Nvidia deserves to get sold off in terms of decreased revenue, or you think they're still going to grow regardless of?
I don't see how this decreases revenue.
Well, yeah, I think it decreases somewhat, but it doesn't stop them from growing 50% this year, which is what they need to do, right? So I agree with you there.
They have a 56% profit margin, even if they only grow their revenue by 20%. It is still tens of billions in new profit.
Yeah, it's just they probably won't be $3 trillion if they only grow 20%. So
I mean, they should. Well, I would disagree.
Well, you would disagree because you think people are crazy paying what they're paying for Costco right now, which I get.
I mean, Costco is obscene.
I agree. I mean,
go buy Coca-Cola instead.
Again, I think one of the mysteries 2 months into this market is why are people paying a 57 PE for Costco and a 25 PE for Nvidia?
It makes 0 sense, man. 0 cents. I'm actually going to do a Costco rant tonight on Twitter. So because you wanted me to, I'm going to do a Costco rant on Twitter.
Okay.
And see how many people get mad because people love it. And listen, I love Costco too, but that doesn't mean that it is accurately valued. I mean, think about it. If you were going to buy a company based on profitability, would you want to pay $490 billion or whatever the market cap is now of Costco for a company that generates $7.5 billion in profit? Or would you rather pay $330 billion for Salesforce that's doing, I mean, what's Salesforce doing, 11 or 12? Something like that? Or Cisco under $300 billion for a company that's doing around 11 or 12 billion. I mean, it's ludicrous that Costco is getting this valuation. So has a profit margin of like 2%.
No, I agree. We just got some news right here that CoreWeave, I don't know if you heard of these guys, they filed officially to go public.
Who?
CoreWeave, so they're a semiconductor company that competes with Nvidia. CRWV is going to be the ticker. The reason I'm asking bringing this up is because do you think this is an environment where companies can actually go public right now?
Yeah, I mean, there's a lot of liquidity out there, so people can raise money.
Well, the liquidity is not in Nvidia today. I mean, like when you say there's a lot of liquidity, are people going to be more excited to buy Discord than Nvidia? Is that your point?
There's almost $7 trillion sitting in money markets. That does not include CDs or bonds. There's liquidity out there to fund things.
Yeah, but why would it go to a brand new startup that goes public over Google?
Because they have a better chance at having triple-digit growth rates. Why do people invest in quantum stocks that can't compete with Alphabet or IBM? I don't know. They just do.
No, it's a fair point. I just feel like if we end March down another 2-3%, I don't know if there's that much appetite, I guess, to buy Discord or Stripe or whatever if they go public.
I mean, look, we're going to find out pretty quickly.
Yeah, I mean, you can't see the screen right here, but the S&P 500 is down 0.32% year to date. Even with all the pain.
People are worried. The S&P is basically flat. The guy's been in office. I mean, this administration hasn't even been in office 100 days. It's going to be choppy. It's a feeling out process like you're in a boxing match. It's going to be choppy. I don't think anybody thought it was just going to go straight up. And I'm not convinced that tariffs are 100% going to go in tomorrow. He says they're going to, but he's going to, if you think that he's not going to be on the phone tonight trying to figure something out because he judges himself off the stock market, or even if they go in, that there's not a deal to be made down the road, I'm just not worried about it. The guy focuses too much on the stock market to worry about this. Day to day, unless you're a trader, day to day should not matter, or unless you need the money right away.
Yeah.
I mean, all the companies I'm invested in, for the most part, I have very strong bull cases on them, and I'm willing to ride the waves. I have no intention of selling for a couple of years. And the reason I say most is because I will sell SMCI at some point in the near future.
Have you not sold SMCI yet?
No, why?
You sold your options though.
Yeah, I sold my naked calls. I still have my spreads and I still have my shares.
Oh wow! So you are really, you believe in freaking super micro, dude.
I believe in it. It's a couple lotto tickets. I'm either going to do okay on them or it's going to be whatever. I don't care.
Yeah, it's money you can afford to lose, obviously, so that's fine.
You know, when SMCI goes back to 50, I'll probably sell the shares. And I'm going to have to exit the spreads at some point this month because they're at 328 or 326, whatever that Friday is, expiration. So I'll be out of those at some point this month too. But I mean, that's just money that's going to go into Nvidia at that point. So, you know.
All right.
And Block, because I think Block's going to do well. I really do. People think I'm crazy about it, but
I don't think you're crazy.
Earnings potential is good, very good.
I don't think you're crazy. I just disagree with this one. But you know,
yeah, we'll
it
see.
is what it is. Okta, by the way, they just had not IPO. They just had earnings. They're up 15%. Okta.
Oh, Okta, okay.
Enterprise identity security, and then GitLab's up 4%. And those are the main earnings today for you that you care about.
You'll like this. The SoFi community is going to condemn me tomorrow.
Wait, Steve, can you turn off your metronome real quick? It's just in the background.
The SoFi community is going to condemn
Okay,
me.
why? What are you going to say about SoFi?
Because I have an article coming out tomorrow morning that just got approved, and I downgraded my rating on it.
Wait, okay, hold on. But what's the price target?
No, I don't have a price target in there, but I'm not willing to go hold yet. But I went from being very bullish to just bullish, and I think people are gonna have a problem with that.
But what is your price target on SoFi? It's like $20, right?
I have no idea. I don't know. It all depends. I'm not a happy camper right now with them.
Are you being a little bit prisoner of the moment, or you genuinely think SoFi is screwing you right now?
No, I'm happy with the results. I'm happy with what they have accomplished. I'm happy with the price appreciation. I'm not happy with the execution of two things, or I should say one thing, because other things I'm unhappy with the communication of one aspect and the execution of another. We know that they have been in several RFPs for the tech platform, but they didn't even talk about it on last earnings call. They need you to go in there and give them a lesson on PR. And even though they did not say anything, doesn't mean they don't have to. They signed NDAs, but they can still say, we're currently competing in about 15 RFPs, and X amount, 3 of them are with larger scale institutions. They're not giving away what size or who they are, but you can keep people up to date and say, some of them have been going on for 6 months, some have been going on for 12 months. We typically expect the RFP process to take 18 to 24 months, with potentially another 6 to 12 months for implementation. You know, give us some groundwork that you're still working on this and still bullish about this, because the only way that SoFi gets a tech multiple or a hybrid multiple is if they're looked at as more than just a bank. And that's all they're being looked at right now is just the bank. And they're not being looked at as having the potential to become the AWS of fintech or bring banking as a service to the service. And they got to tell the story better on that. And I think they're missing the mark there. The other thing is the whole business banking and wealth management, because that's another thing that they are just leaving money on the table with.
So this is a communication thing that you're really pissed off about, essentially.
Yeah, because we know crossing over 10 million members, adding 750,000 members in Q4, and consistently adding members, obviously people find value in the product. Regardless if I use it or someone else uses it, you got 10 million people using the product and it's continuously growing, people find value in it. Obviously the revenue is growing, grew 26% or so this year. I mean, EBITDA is growing, net income is growing. Company's growing. Obviously they're making money, but their fundamental case to differentiate themselves is owning the back end. And the only company that owns the back end and has a vertically integrated single core stack for the entire platform that I know of. And I've done a lot of research trying to debunk that theory, and I still can't debunk it. So if somebody can give me the information so I can look into it, so I can stop saying it.
Okay, are you more bullish on Block or SoFi right now?
I think Block's got more.
Wow, dude, I would buy SoFi over Block hand over fist.
No, but that's not the question you asked me.
No, the
You
question
asked
is, which one would you
potential.
buy? That's bullish. Buy. Like, you've been in this for a while.
So-
You know, like
so-
that's what I mean.
If you're looking at today's prices and today's valuations, and you come to me and say, Steve, what do you think has a better chance of doubling from here in the shortest amount of time? I think it's Block, not SoFi.
I disagree. I think SoFi to 25, way before Block to 120. Disagree.
We'll see. We'll see.
Can we wager on this? Can we bet? Can we make it exciting? Can we bet?
We can figure something out.
Well, let's figure something out, and then we'll announce it to everybody.
We can figure something out.
We might be
Yeah,
around
I
for
would
5
think that.
years waiting for both of them to double, but but still.
Maybe, but no. I mean, Block is if Block's guidance is legit, and if the analyst community is correct, they're trading at a super discount. Whereas SoFi,
I've had my issues with Noto, but I would take Noto any day of the week over Dorsey.
I would take Noto over Dorsey any day of the week too. I'm just saying that based on the numbers, Block is a more interesting short-term play. Long-term, SoFi all day. But there's a communication issue. They didn't discuss the RFPs at all. People only
Maybe they don't have any RFPs. Maybe they don't have any. That's also, you know.
Let's not say that because they said they did. But really think about it. You know it because I've drilled it into your head. But how many people outside of Tanner, Tevis, Roy, me, you, and people that actually really follow this closely even know what the AWS of FinTech or banking as a service is? Not many. And that's a problem because they're not ingraining it into the analyst community and they're not spending enough time discussing how important it is, not just for them as a company, but for the industry as a whole, because the original banking architecture that companies still rely on is archaic. And you have new compliance laws, new governance laws, and everybody has to move to cloud-first platforms. And there's a huge opportunity here, and they're missing the mark from a communication standpoint. And they should be updating the shareholders about the RFP processes, even if they can't give names or time durations as to what stage they're in. They can make generalizations and sell the story.
Did you see what Noto said to someone who tweeted about the stock?
No, what did he say?
Wait, you never seen this? This was last week or 2 weeks ago.
No, what did he say?
So I'm trying to pull it up right now, but yeah, here it is. Here it is. So data-driven investing, our friend Chris, Roy tweeted a screenshot right when it was 1640, and then Chris quote tweeted and said, "Hey, Roy's screenshot is what took SoFi down. Don't blame me today." And then Noto responds. They were just having fun, right? Noto says, "You guys are killing me. Just let it be, and it will be." So Noto is kind of scolding them for tweeting screenshots about the stock. And I don't think I've said this on the air before, but my take was that I didn't like that, dude. I kind of hated that he was like the angry adult in the room telling the kids to stop talking about the stock. I'm like, bro, Roy and Chris talking about your stock is actually what gets people to want to buy the freaking stock. Like Vlad would just like laugh at that, whether the stock's up or down.
I mean, here's the thing. I think that he's probably sick and tired of people talking about it because of how much people talk about this stuff on Twitter now.
Yeah, but Steve, wouldn't you rather have people talk about your stock than not?
And I'm sure that he's sick and tired of SoFi being compared to Robinhood and stuff like that. But saying that to the two of them is horrible.
I agree.
For the simple fact that they're two of your biggest advocates. Don't say anything. That's it. Just don't say anything.
Yeah, I haven't given my take on this because this happened a couple weeks ago and we had too much other news to talk about. But I guess now we can talk about it. I hated that dude. Like that's like Vlad. If I screenshot Robinhood, Vlad's like, "Oh, dude, like, why are you tweeting about the stock? Like, it's so annoying, you know? Like, it's just like, well, now I don't even want to talk about your company anymore, right? Like,
my thing is just don't say anything about it.
Yeah, just don't say it. Like the fact that he says "let it be," I'm like, dude, like, do you want people to be excited about?
And I think I get what he's saying. I think he's trying to say, look, I'm just going to paraphrase my own opinion, speculating. But he's probably sitting there like, listen, guys, it's going to take some time, but we're in a good place and things are going to happen. Just let it be. And I get that, but you don't have to say it.
Yeah, and also saying that to Roy and Chris, which have covered the stock, you know, beautifully, is just a little bit of a slap in the face, in my opinion. I was just like, that's just.
I mean, it's because of Chris that you now have that slide in there on the earnings presentation.
That is true. That is true.
So,
Like
I just wouldn't say
if I was
anything.
Noto, I would have just tweeted some laughing emojis. Like I wouldn't have like he put 2 periods, bro. Who tweets with a period? Like he's like tweeting like it's an email or something. I'm like, what is
Well,
it? Like
I can't wait to see what he says about my article, considering I've only been very bullish about it. And I put a whole section about where I think SoFi is missing the mark in this thing.
oh, he's heard it plenty of times from Tanner and the rest of these guys. He doesn't do anything about it. So
Who knows? But I mean, I am annoyed at their communication. And look, they obviously have the infrastructure. The fact that they're not doing business banking and they're outsourcing it to third parties is crazy. That means they're not lending the businesses, they're not taking in their capital, and they're missing an opportunity to be their custodian for their retirement.
Dude, their sales pipeline must suck if that's why they're not getting it's just that simple, right? Like we don't have to overcomplicate. They can't sell the product. This was Palantir back in 2022. They couldn't sell the damn product. Like maybe they just
I would love to have a conversation with these guys about this and have them convince me that I'm wrong. And I'll certainly say that I'm incorrect, but just anybody. So think about this. I tell you all the time, invest in S&P for your retirement account, right?
Yeah, you do. Yeah.
Okay. So in all the years I've been doing this, I've talked to somebody at the custodian for my retirement account one time. In all the years I've been doing this, one time I talked to them. And after that conversation, I'm like, I'm never talking to anybody from that company again because I don't need to. Go into the S&P every 2 weeks. The amount of clients that they would have on the retirement side that they never talk to, and they just get paid an asset management fee for doing nothing except holding the capital there. There's a reason why those companies do very well.
I agree. It always comes down to communication, right? Always.
And think about this: people look at AUM for ETFs and mutual funds. They become wealth management custodial. Get a company with 5,000 people in there for retirement accounts. Now you tell their committee that in addition to these other products, if you put SoFi's S&P index fund versus BOO or SPY, we'll drop the management fee from 0.03 to 0.02. So they give them a cut rate deal on that, works out better for everybody. They're still getting paid the money on it, and they're increasing the AUM, so it's more attractive to outside investors. And on top of it, they're getting the quarterly management fee of 1% or whatever it is from the asset management arm to be the custodian for the 401ks. It's just, there's no reason for them not to do it.
I agree. I think it comes down to a communication perspective. And that's been my beef with SoFi for a long time. I just never felt that they actually engaged, especially when they have such a big retail base, but I don't think that's going to change anytime soon. So I love the stock to sell covered calls on, though. These people will freaking buy a covered call, 10% out of the money, you get 4% return in a month. So I'd love it for the calls. And I have some options on this thing, so hopefully it'll work.
Yeah, it doesn't suck. We'll see what happens tomorrow. I mean, maybe these tariffs don't go into place. Or maybe they go in a half rate. Who knows?
You know Trump has a State of the Union tomorrow, right?
It's tomorrow night, right?
Yeah, so I think he actually wants the tariffs to go in place so he can brag about them in the State of I kind of think that's why he picked March 4th.
Yeah, it'll be interesting to see what he says tomorrow night.
Yeah.
But this is nothing to worry about. I mean, it's short-term pain.
No, I agree.
And plus, think about it, if you're a long-term investor, what are you worried about? You just put money in on Thursday or Friday, depending on when your paycheck hits at the end of the month. You got money taken out, and you bought the S&P, you bought total market funds, or you bought target date funds. And then if the market keeps going down, you're just buying again at the end of next week. I mean, that's the beauty about investing in S&P with retirement accounts. And I see all these things in 401ks are a scam. They're not a scam by any means. And that's why buying 2 weeks, you average down, you average up, and you continue to buy, and you're able to take advantage of situations like this. Because in a year from now, I think the market's going to be higher than it is today.
Elon's going to be with Trump at the State of the Union tomorrow. We just got that news.
Can we talk about that for a minute?
Go ahead. You have the floor. Say what you would like.
I am not, as a Tesla shareholder, I think that Elon needs to get back to work.
Do you think he's not working right now?
Not what I'm saying. There's a perception.
You literally just said get back to work. So apparently you think he's not working.
Get back to work. As in, make it seem like you're actually working at Tesla. I don't care if you want to spend all this time at Doge. Do it from the Tesla office.
Wait, why does he have to be in a Tesla office to work?
Because there's a perception that he doesn't care anymore.
I don't think that perception is going to change if he's wearing a Tesla hat while during the day and still not working.
It can't hurt.
You're right. It can't hurt. That's fair.
It can't hurt. I mean, the stock's gone from 400 something down to whatever it's at right now. So, I mean, I get it. The guy's taking a sabbatical at the moment, but at the same time, you're still running multiple companies. There's a perception that he doesn't care. He's alienating half the country. And that was the beautiful thing about Jordan. He never got political because he wanted both sides to buy his shoes. And robots cannot come quick enough. I cannot stress that. Robots cannot come quick enough.
Wow. Okay, hold on. Someone said they listened to 3 hours of Joe Rogan and not once did he mention Tesla, FSD, or Optimus.
Another problem.
I didn't even listen to the pod, so I'm trusting you on that, Gene. But if that's true and he barely talked about Tesla, I mean, yeah, it kind of proves the point, right?
Yeah, I mean, he probably went on Rogan just to get everything out that he's been finding. I mean, I listened to half the thing, and that's pretty much what it seemed like. He did talk about Grok and XII, though.
Oh, yeah, they started it with the unhinged mode and all that stuff, right?
Yep.
You know what I was upset about? Why does Tesla not own any equity in XAI?
I don't know, but they should.
Like, in the first funding round, why do they not even throw in a couple $100 million like that? Like, they have 10 billion in cash or 20 billion in cash. They're not buying back their stock.
I mean, Tesla shareholders should benefit from everything Musk does. It should have been a seed round in SpaceX. Should have been a space.
Yeah, why does Tesla not own some of SpaceX either? Like
all of his companies, they should have had a seed round funding for every one of his companies.
I mean, it's not the biggest deal in the world, but it's just. I'm just curious why.
No, 500 million in each or $1 billion in each. That way, nobody can get upset with him running or working at these other companies because it indirectly benefits Tesla.
Yeah, and if anyone says there's a conflict of interest, it's like, screw you. These are the most important companies in the world. It's, you know.
It's not, because Tesla's a shareholder, so you want him to do what he does.
Yeah.
But he's got a serious PR problem right now. He doesn't care, but just because he doesn't care, that doesn't mean the street doesn't care or shareholders don't care. And shareholders have backed him for a very long time. And it's just, I understand what he's doing, but it's hard to watch it when it comes to being a Tesla shareholder.
Did you see in France someone tried to burn 12 Teslas in an arson attack?
I did not, but I saw Sheryl Crow donated her Tesla.
Sheryl Crow donated her Tesla?
Yeah, to the charity because she's...
Okay, who is Sheryl Crow, first of all?
You know, you didn't...
Is she a bird or something? Is she a type of, like, what is
No, you didn't do that.
Dude, who is Sheryl Crow? I'm not playing, bro.
Wow,
She's a singer, right?
really?
Musician?
Yes,
That's what she is?
Yes.
Hold on. Sheryl. Oh, she made the song in Cars? Oh. Okay. I don't think I really know what she sounds like, but all right, cool. So she donated her Tesla because what? She thinks Elon's a Nazi or something?
I don't know. It was political, but I'm just saying it's not the best look for a public company. That's all.
Yeah, she donated the proceeds to NPR. Interesting. She says, there comes a time when you have to decide who you're willing to align with. My parents always said you are who you hang out with. NPR is under threat by President Musk. Therefore, she's selling and donating it to NPR.
Yeah, look, whether you agree or not, it doesn't bother me. But at the same time, it's just not a good look for a public company that relies on an overall market. Because if you alienate half the country enough, that's half the country that's not going to buy your products.
Wait a second. Sheryl Crow made Life is a Highway?
So you do know who this person is.
That's the car song. Yeah. Oh, I know her. Okay, we're good. Everyone, we're good. But okay, so the political ramifications of that, along with all the stuff going on in Europe, do you think that has a material impact on car sales in Q1?
I don't think it's a material impact on car sales overall. I think that if growth is slowing and if people are getting laid off, that's going to have an impact. But I think that there's definitely a headwind right now with Musk being all out in the open with this, because look, this isn't a country that's 80-20. This is a country that's very much, 48-52 on any given day either way. So it's hard to really get that aligned politically and not face blowback.
By the way, she didn't write Life is a Highway. That's Rascal Flatts. She did a cover of that, so you lied to me. But anyway. I agree with you. Look, I don't think it's going to have a material harm on their Q1 numbers, but the brand perception, you're right, dude. It's like it's getting hit hard. Granted, I don't think that outweighs robotaxis or FSD.
I don't think Q1 numbers are going to be great. I mean, I think that the EV wave is losing steam, and I don't think the car business is that great overall as a sector. Tesla's got the best margins, but is it that exciting for them to really get a bid? You need FSD, and it's not just you need FSD. You need to prove that robotaxi is going to replace cars, not just take away business from Yellow Cab and Uber. And I'm not convinced it's going to replace people owning cars, because Uber isn't replacing people owning cars.
That's true. I agree.
What's the difference between me ordering a Tesla from Tesla's network or me ordering an Uber? I'm still ordering a car, but I still have two. So
yeah.
I don't think people are getting rid of cars the way other people are making it out to seem. I really don't.
So you're not buying Tesla here?
I would get interested around 200 or under.
My dad
even 200's high.
My dad's thinking of getting a Tesla as well. And the one point I made in the show is that if they get rid of that $7,500 tax credit, there's no way he's going to get a Tesla. So that's another thing that could be bad, bro. If they get rid of that, and Trump said he was going to get rid of it 2 months ago. They haven't done it yet, but
I also don't think the EV story is what it once was. You don't hear a lot about EVs anymore. There isn't a huge push for EVs. And I know a lot of people that still have gas vehicles. I have two of them. I don't drive an EV.
Well, that's because you're too ideological. If you actually drove a Tesla, you would love it. But
I've been in them. They're great cars. They're just not practical for me.
Oh, I love my Tesla. I can't say enough good things. Like, I really do love it. But I get you. It's not. It's in 2019. It was everyone needed one. Now it's like you don't need an EV, especially if it's a lot to finance it.
Yeah, but just think about it. There's fundamental problems with the EV idea. So you have high school kids. You're going to get them an electric car. They're going to forget to charge it. They're not going to be able to charge it.
Okay, Steve, you telling me a 16-year-old can't remember to charge a car? I
can't remember to charge my cell phone half the time.
Well, actually, me either. But still, like, I don't think
There you go.
I don't.
And then college campuses. Where are you charging Teslas on college campuses?
You'd be surprised. There's actually a lot of superchargers on college campuses.
Where are you charging Teslas in apartment buildings in New York City or Jersey?
Well, that I'll give you. The apartment complex is harder.
I'm just saying.
Like on Rutgers, there's plenty of superchargers near Rutgers where I went to school. That's not a...
So where I live, there's parking on all the streets. There's no chargers. And you can't find a spot anywhere near my building.
Yeah, well, New York's different. I mean, it's hard in New York. But
so I'm just saying that there are fundamental disadvantages with EVs right now. Until you make solid-state batteries that can charge themselves, there will always be that argument. And that's why Optimus and FSD are so important to the investment case. And I'm not putting a lot of stock in FSD. It's all about the robots.
So in June, do you think Austin's launch of unsupervised FSD ends up definitively beating Waymo and Uber's partnership?
I don't think it matters.
What do you mean?
I don't think it matters.
As in, I think it matters because if that works, then they can start expanding. So to me, yeah, they need. But I guess you're not sold on the entire TAM for the industry, which is why it doesn't matter.
I'm not sold on the TAM, and until you show me an insurance policy that's going to underwrite it, there's nothing to get excited about.
Right, it goes back to insurance for you. Yeah, you've always had this concern, you know.
Because, and you have car insurance on your Tesla.
I do.
But if it becomes legal for full self-driving, okay, where you can take a nap in the back, your insurance policy, there's a halfway decent chance you have to try to find a specialized insurance policy that will underwrite that. Because there's no guarantee that all the carriers from Geico to Allstate to State Farm are going to offer insurance for full self-driving.
Yeah, I mean, I think there's ways to resolve that, but I feel you. I get your point, why that's a concern. I just think if the concept of it works in Texas, they have a launch pad to keep going further. And then obviously the tech, right? Like I upgraded 13.2. It's incredible. And by the time they release 14, I don't know if the fear of a crash is going to be as big as what you may be thinking, which is the whole point of insurance in the first place.
No, I'm not even going with fear of a crash. I'm just saying, if a crash does happen, because there'll be some, probably not many, but there'll be some.
Yeah.
Who's responsible? Is it you or is it Tesla? That's the first thing. And then if it's you, an insurance has to be willing to underwrite that risk in order to issue the policy. And we just don't know if they're going to or not.
Yeah. That's fair. It is a fair point. I guess we're going to see how this plays out. You still haven't tried FSD 13, so one day I got to get you to try it.
Everybody that I know that has one says it's amazing. And I'm not saying it's not. I mean, I've seen the videos from Waymo, I've seen the videos from Tesla, and it's amazing. But at the same time, that doesn't mean it's going to be nationwide anytime soon. Doesn't mean that insurance companies are going to underwrite it. And it doesn't mean that Tesla's network is going to cause people not to buy cars.
What was I just going to say? Oh, I was going to say this. Okay, so transitioning from Tesla's last thing I'll say to you, I got to give you props on this one because you definitely said this stock was going to suck in 2022 when it was at all-time highs, and it sucked.
I have no idea what you're talking about.
Enphase is up 5% over the past 5 years.
Yeah, look, at the time, there was a time when
it hit a new low today.
When they had really good free cash flow, when they had really good metrics, but the story changed. And when the story changed, I said, this isn't something that's going to work out well.
Yeah, I mean, obviously this has been a disaster, bro. This has been so sad too, because I mean, like again, if you look at the 5-year chart, these guys were at 320. Like December 2022, when the market was bottoming, these guys were topping. That's how crazy this was.
Yeah, but you want to know why? Because these are the types of stocks that people get into narratives where just because somebody thinks something's great, they think that everybody has to think the same thing and that everybody's going to follow suit and everybody's going to have solar on their roof or everybody's going to drive a Tesla. Neither of those are true.
Yeah, I mean, the solar thesis has absolutely gone down the drain.
Drive around communities. How many houses? 1 in 10, 1 in 20, 1 in 30? How many houses have solar?
No, it's annoying.
50?
It's annoying too, because when they come up to your door and try to like persuade you, like no one wants to talk to them. Like no one wants to sit down.
No, because they start getting into these reverse leases and all this other shit. Because they have so many different types of programs to try and incentivize it. If the product was that good, that people would just buy it. They would just buy it. The fact that they have to come up with all these different things to try and convince people is a problem.
Yeah.
And look, the investment's not small. I mean, one of my buddies loves solar, but he just built a new house and he's got 3 of the Tesla battery walls in his garage. Like he built it with the idea that if something happens, he's always going to have power. Now, granted, he's in a position to do that, but I don't know that people are just putting solar on just to lower their energy bills. Like, I think people are more doing it because they're getting the power walls because they don't want to be without electricity. But at the same time, You can get the same effect by just putting a generator in. It's a lot cheaper. So get a natural gas generator from Kohler or Generac, and you get the same exact thing. My parents just put one in, freaking power goes out instantaneously, auto switch, whole house is running on a Kohler generator. I mean, the solar thing, I think is, I don't know. It doesn't work for me.
All right. I think that's it. Steve's Twitter is in the description. Steve, we are looking forward to a rant on Costco on your Twitter tonight. So please make sure to post that later today. I'm sure all of us would love to read it. And
I haven't wrote it yet, but yeah, I'll make some time to write tonight.
well, you write 5 articles a week. You can write up a couple paragraphs. So, you know.
Yeah, well, you know.
No, you legit, guys. He writes 5 articles a week, or like 4, I think. Like,
5.
he's a machine, bro. He's an absolute machine. So,
and that's just for fun.
I know. So we got to get you to post some of that stuff on Twitter because now you have an audience that wants to hear your thoughts.
Well, I started with the Nvidia one.
Yeah, it was good, but people are still so pissed about Nvidia today. So I got so many messages. They're like, "Why is it down?" I'm like, "Cause it's down." It's just, like people just start being erratic. Like they just want an answer, and it's like, "Well, it's down. Like, what are you gonna do about it? It's the stock is down."
Everybody's got such a short-term mentality. It's crazy.
Yeah.
You know, if you can't stomach fluctuations of 20 or 30% at any given time, invest in bonds or invest in cash. Like,
you know what I think it
when
is?
I say bonds, I mean muni bonds, not free or government bonds, not stuff that fluctuates, not corporate debt, because that could end very badly too.
I also think there's a lot of people, and these are more younger than older, that are literally investing with money they cannot afford to lose.
And that's also a problem.
I think they are freaking. I'm like, dude, you're like 22 years old. You're like freaking out in my DMs about Nvidia. And it's like, you have your whole life ahead of you. Second of all, you probably shouldn't have invested into Nvidia if you've got to pay rent because you're 22 years old. You don't have any money. And it's like people, you know, it's kind of bull market shenanigans where people get, I've been through that when I was 22 as well. But it's people freaking out for no reason at this point.
Yeah, look, the people that are mainly investing in their retirement accounts every 2 weeks for their paychecks are not freaking out right now.
Not at all, dude. Not at all.
They don't care. Well, look, a lot of people I know don't necessarily invest in single equities. They're just buying an S&P every 2 weeks or a total market fund every 2 weeks through their retirement account, and maybe maxing out a traditional IRA in an S&P fund. They sleep well at night. They don't talk about stocks. They don't like when I talk about stocks because they think it's boring. And they're just along for the ride. They know that in 20, 30 years, they're going to have a huge amount of capital there. And sure, they're not going to have those millions of dollars today or tomorrow, but it'll be there when they retire. And those people are not losing sleep. They're not looking at the market every day, and they're not caring what's going to happen this month or next month.
Yeah, and even if you are investing in individual equities, like as long as you're not doing it with money that needs to pay the rent, I also think you're not really losing that much sleep.
Yeah, I would agree with that, especially if you're picking high quality companies.
Yeah, like
that's the other thing.
Yes, like if you believe Nvidia's high quality and you're down 10 grand today on Nvidia, it's like at some point, this thing was at 140 2 weeks ago. Like it's either going to reverse or it's going to be stuck there. You're going to have to DCA. You're going to have to, you might be wrong on it, but you don't like it's not like you invested in Bed Bath and Beyond and you're like, oh my God, like this is horrible. Like what did I,
Beyond you had to say them. Okay.
Why, you invested in them before?
No, I used to work there.
Oh, you used to work there.
Yeah, I worked at corporate.
I feel like you told me this a while ago, but I forgot. Wow.
Yeah, it's a sad. I mean, I left when I left, they were a $70 billion company. But
really,
yeah,
they were a $70 billion company.
Something like that. They were huge. 50, 70. I mean, they were huge. Something like that.
They're not bankrupt though, right? Or are they?
I stopped following what's happening with them. They went under or some deal with Cohen or somebody. I don't know. But I think there needs to be a whole thing on high quality versus low quality. Like people go looking at these high growth companies that aren't necessarily high quality and freak out. Like think about Celsius. Everybody's getting on a Celsius bandwagon. And what I say to you, I really don't like it. You and I did that whole podcast about, I'm like, I actually think Monster's margins are better. And I just didn't really like Celsius at the time. And it's down from 70 or 80 to 30. I mean,
to be fair, they did pop 20% last week, but yeah, they're back down.
Okay. They're still down.
Yeah. Yeah.
You know, I'm not. I think that if you're sticking, even the best companies in the market, even Apple, which held the market together to some degree during 2022, even Apple ended up getting cut by 30 or 40%. Amazon got cut by 50%. Even the greatest companies in the market go through difficult times. And that's what I was saying about Palantir.
Oh, we didn't even
That's
talk
staying
about
up in
Palantir
25.
today. We didn't even bring it up.
Why? Well, is it up today? On a down
No,
day?
it's down again today with the whole market. It's down.
Okay. What's it at?
83.
Okay. It needs to go down another, 30 or 40 to make me happy.
Oh my gosh, dude.
But yeah, I mean, look, even the best companies experience downturns for no reason.
Yeah. I mean, dude, if Palantir does go back that much, obviously your covered calls will be good, but I think a lot of people will be happy to get back in. But I don't know if it gets down to those levels. Now, granted, if we legit have a market, because we're not in a market correction, we're less than 1% down. I don't know. If that happens, I guess we see. But this is gonna be something I think everyone needs to remember. I said this, I think you and I both said this a couple weeks ago, but Palantir even maintaining these multiples, which I think they can. You think you're more on the side of like, they're not going to maintain this. I'm sympathetic to that. That is very possible. But I think they have a shot. If they can even maintain, let's just say 70 to 80, let's just give it that $10 range, that would be a win. Because even at these multiples, it is very expensive. And we talked about that on Palantir.
It'd be a huge win. I mean, they're trading at 50 times this year's sales. Not even the year that they just finished. This year's revenue. They're trading at 50 times. So, I mean, that's expensive.
Which, by the way, that was January. That was my thesis. My thesis was super bull case. We get to 95 end of year. My actual bull case was, can we consolidate after a 400% year in 2024 and just stick between 75 and 85? Because that's where we were out by the end of January. But then we went to the moon after earnings. And obviously we came back down from the moon. And now I think everyone's wondering, even management. I think even management's like, are we actually going to be able to stay a little bit elevated from Earth? Because they're not on Earth yet. They're still above Earth at a $200 billion market cap.
You're still in a high orbit at this point.
They're still in high orbit, correct. And
so we'll see.
Yeah, I guess we have to kind of find out how this plays out. All right, Steve, thank you so much. Appreciate you. People really wanted your opinions on a day like this. Again, Steve's Twitter right here. He is committing to tweeting more. So if you see his tweet, read it, give it a like, engage with it, and I will talk to you later.
All right, sounds good. Talk to you later.
All right, talk later, Steve.
Bye.
All right, cool. That is it for us today. Sucky market. I know it sucks. Hopefully some of Steve's words gave people a little bit of comfort. His perspective is very similar to mine. Kind of just got to deal with the pain, even with certain stocks being down, given the S&P 500 is really not down that much. So it's hard to be that upset about the broader markets. We are going to get more Trump tariff news later today, so I'll be updating on Twitter my thoughts in terms of what's happening. But I think by around 10:30 to 11 tonight, we get some details on these tariffs. And then by 12 a.m., they're supposed to be signed. So, if they get signed, they will officially be in effect by midnight. And then tomorrow at the State of the Union, I'll be streaming that live. We will see what Mr. Trump has to say about these tariffs. For those asking about my bear, I never told you guys the story behind this bear. So this bear, I've had this bear since kindergarten. His name is Scruffy. It's a cute name, right? I've had this bear since kindergarten. And I got this bear. I remember the day I got this bear. I think our teacher was just giving everybody like a little gift or something. I don't know if it was Christmas or something. And I've always had this bear since I was little. And when I was really little, I used to like talk to the bear. Like I'm talking about really little, when I was like 25 years old. Now I'm 27. But like when I was really little, I used to talk to the bear. It was like my version of an imaginary friend. Now I look at the bear and I'm like, I need a bull because I'm more of a bull than a bear. But nonetheless, this is a little bear that we have right here. So yeah, his name is Scruffy. It's a cute name, right? So Mila says wash it. Okay, so this is also really funny. My mom has wanted to wash this bear for 27 years, and I have not let her. Why? Because I feel like if you wash it, that kind of like I haven't washed it in 27 years. It's like legit. Like I've wanted the bear to just I wanted the bear to just be authentic. Like I don't want to put it in the washer or anything like that. So this is yeah, it's not has not been washed for 27 years. My mom always gets so mad. Maybe she washed it one day when I wasn't looking or something, but I've never let her fully wash it. So yeah, see, you guys say it's disgusting. I say it's authentic. Okay, I say it's like imagine how cool it would be if I'm 95 years old and I'm like, wow, I never washed this bear for 95 years. Like I feel like that's actually kind of cool versus not. So that's the story of Scruffy. All of you guys are in agreement with my mom. She's gonna be so happy when she sees this. She's like, I told you we should have washed it. I tried to give it a mohawk at one point. This is how you know I didn't wash it. I used black marker. This is when I used to be like into WWE and I saw some wrestler with a mohawk and I was like, all right, Scruffy, you're getting a mohawk today. And I took a black marker and I like drew this. You see how it's still there? That's how you know it's still somewhat there from like 2009 or some shit, bro. 2007, maybe 10 years ago. It's wild, bro. But yeah, that's that's what we got for Scruffy. That's where COVID came from. It just sits right here. It doesn't really, I don't really talk to it anymore. It's just kind of in the background. But yeah, that's what we got. You know, someone said something funny. They said the Palantir bell. They said the Palantir bell was the top. And I'm not gonna lie, I kind of get the point. Like when we rang this, like this had to be a top. I mean, to an extent, at least a short-term top. So for anyone saying the Palantir bell was the top, yeah, I agree, dude. It was a fun top though. 120 and 125, we got to ring it. I don't think we get to ring it again until at least 100, bro. Like at least 100 we got to see to ring this thing again. But yeah, I understand everyone's concerns with that. We'll see whenever we have a chance to ring the bell again. It was so cool though. The day I got it, the from the meetup, the day after on the market open, literally the bell that we rang to open up the show was that bell because Palantir hit a new. I think Palantir hit 120. It was like 119.50 in the pre-market, and then we hit 120. So it was cool while it lasted. 2 weeks ago, which feels like forever ago, but it was 2 weeks ago. And I guess we're gonna have to wait until we bring it again. So that bell crashed the markets today, not tariffs. Yes, exactly. Did we get any insider sales today? Let's see in Palantir. We had a lot of insider sales last week. Let's see today if we had anything. Oh, we got an insider sell. How bad is it? There's nothing. 60,000 shares. That's by Alex Moore. That's just the board member. Nothing too crazy. Let's check Robinhood. Did we get any insider sales today? We're going to get February metrics soon. No, nothing by Robinhood today. February metrics for Hood, which I think are going to be really good. Crypto volume is probably down a little bit, but everything else should be okay. We'll get that soon. And then we'll have Hood Weekly later tonight as well. Admit to your parents and sister watch your lives much. So my sister never watches. She didn't even watch the podcast I did with Brett. My mom was watching it on the big TV and she wanted my sister to watch. My sister was like, I'm not watching this. My sister's honest, bro. She's like, I'm watching Love is Blind. I'm not watching this shit. My dad has started to tune in randomly throughout the day. Like the other day he came home and he was like, so what's going on with Zelensky and Trump? I was like, how do you know about it? He's like, oh, I was watching you talk about it. I was like, oh, okay. Because he's tuning in. He's like actually getting interested into the market. So my dad tunes in here and there. My mom does not watch this. I mean, sometimes. My mom hears about me talking about her though, because my uncle watches and then he tells her that I'm talking shit about her. And so she confronts me every other day when she hears about it. But besides that, yeah, my sister and my mom do not watch. February metrics are not today for Robinhood. Probably March, I'll say 11th, by next Tuesday. We should get them. So we will get them soon. And hopefully those metrics are pretty strong as well for the month of March or for the month of February. Bro's going to beef with his mom about why she never got him a bull when he was younger. My mom didn't get me the bear though. It was by my kindergarten teacher. I think it was preschool, dude. It was a long time ago. But I remember, I still, like, I can play the memory in my head of the teacher giving me the bear. And I just remembered I really liked the bear. And then I used to talk to it when I was really little. It was like an imaginary friend. But Yeah, now I have the bear. Does your dad read the comments? No, he doesn't read the comments. I don't know. Maybe he reads the chat. I don't think he does, but he does tune in here and there. Okay, whatever. Go get the groceries from the car. Dude, my mom just pulled up. I swear if I go downstairs and she says to grab the groceries, I will let you guys know in the morning, but I have a feeling she's gonna ask me to do that. So all right, that's it. I will have the newest market recap episode coming out tonight. Probably 8 p.m. We'll have Robinhood Weekly at 9:30. So we'll see how you guys like it. It's about 15 minutes, and I try to section it off into like macro, tech, etc. I'm still not fully sure on the format. I am convinced that I want to do this every single day because I really do like having the idea of a video accompanying the market open and market close and just kind of recapping everything, but like in a short format with bullet points that's reasonable to consume. It's not going to be too opinion based. Like there's some level of opinion I'll put in, but I kind of want it to be just like you turn it on for 15 minutes and you get updated about what happened. And I think it makes sense. It might not make sense. So we're going to see. If I don't like it, then we'll just go back to what we were doing. But we'll see if it makes sense or if it doesn't. So there it is. Wow, futures already opened. It's 6 freaking p.m. Every time I think the market open will be an hour, 30 minutes. It ends up turning into much more than that. Okay, so futures are open right now. A little bit of green. That's nice to see after all the pain today. So we got somewhat green. Small caps, though, not getting green. They're getting hit. But I guess we can't even trust this stuff, dude. Trump is going to announce so much stuff tomorrow, so we'll see how the market reacts later tomorrow as well. All right, cool. That is it. Thank you, everybody. Appreciate it. I will see you guys on the recap today. I still don't have a name for it. Maybe we'll call it the daily recap. Who knows? But that'll be out today. And then Robinhood Weekly at 9:30. For those that care about Hood, we'll be live for that. And then we'll be back when the market opens tomorrow. All right. That's it. Thank you, everybody. Appreciate you all. I will see you guys later today and then tomorrow in the market open. Bye, everybody. Have a good one.